Hello, everybody, and thank you for tuning in. Today, we have a very special episode. I know I say that a lot, but this one really is special because today we're announcing a brand new ticker on the channel that I've never spoken about. I don't announce new tickers all the time, and I really like this one. It's very interesting. We have here Corrupt Dad, new guy on the channel, and Anthony that you know. Anthony introduced me to Corrupt Dad. And actually, do you want to say your name, or are you keeping it
Sure. No, you can say my name. My name is Trevor. People call
awesome?
me
So,
TJ.
yep, TJ or Trevor. So we have Trevor and Anthony here, and Trevor is well, he's got he's the reason I that got me interested in this stock. Actually, he has a YouTube channel, so you can check him out. Is it at Corrupt Dad?
Yeah, I think it's just Corrupt Dad. You should be able to find me either typing in Corrupt Dad or just any FLWS. I think there's no one else talking about it, but
All
us.
right, there we
Yeah.
go. That he gave the ticker away. So 1-800-Flowers, FLWS. When I first heard it, Anthony actually spoke about it on our last live stream. I thought it was just a simple trade on Valentine's Day. A little simple trade, but it goes way deeper and it's quite interesting. And Corrupt Dad here is probably the only person online talking about this, and he really went on a full deep dive. And honestly, probably one of the only retail investors who knows what's actually going on. From everything I've heard from him, he sounds almost like a roaring kitty.
Don't put
Yeah,
that pressure on me. No.
maybe we're wrong here. Maybe we're wrong, but
Roaring flower.
for the chances that we are right, we are not only super early like you may see in this chart here. If any of you know what Tulip Mania is about, we are at the very early stages here.
I
If
like
what
that you brought
we're
that into
talking
it.
about is true.
That's a good thing to talk about. Yeah, if everyone, that's a good history lesson. If no one knows that story, you should go back in your history books to learn about one of the original short squeezes, or with the tulips, the overpriced of goods, the mispricing of assets. The tulip story is one of the best ones.
Yeah, it's the very first historic bubble that we know of.
Yes, and that's what a squeeze is, guys, isn't it? Which is like the market's arguing over a mispricing of assets, and the pressure builds so much, and then the consensus finally hits, we agree, boom, squeeze.
So why is this going to squeeze? We want to find out. What is, the whole backstory and reason why? What's going on with 1-800-Flowers? You think it's just a flower company? There's actually they own 10 businesses, and the downside's pretty mitigated because all these businesses are making revenue. Their revenue is more than their market cap. And I don't know. There's a lot of interesting stuff going on here, but I'll let Trevor actually speak more a little about it. I don't know where we should really start. Anthony, do you have any ideas? Actually, where should we start? As someone who doesn't really know much about it.
I think everyone should give their own little 2-second speech. You go first, Anthony, because
Yeah,
go on forever. No one wants to hear me. I keep talking.
yeah. So we get into this, gradient scale of known data, and then that goes off into more extrapolated high percentage data. So when I was talking to you about it, it's like the known data all by itself is very good. And then the extrapolated connect the dots potentiality data also seems very good. But people want the concrete evidence off the top. So even like a small summary of like what the situation is, like it's got very mitigated downside. It's, like you said, they got good revenue, and it's like it's kind of pinned where it is only up trajectory calculations, but then from there it gets a little bit more interesting. So I think that's probably good. It's like a quick summation of the situation to get everybody on the same page, and then kind of the known data. And then once we've articulated the known data for the people that want that, then we can go a little further into like connecting the dots and these type of things. It seemed like the most logical approach. It is difficult to communicate a large body of knowledge in a few small moments. It is a skill. So I was thinking about that earlier.
Yeah, we had maybe an hour and a half plus discussion on the phone about this, and it goes really deep. So I honestly am not sure where we should start. But you know
Yeah.
what? I'll let you just begin, Trevor, and we'll kind of maybe cut you off if we have
How about
questions or
this?
think we should get some more background context on
Yeah.
something.
How about
Sure.
this? So let's say you were stuck in an elevator, Trevor, with somebody for 3 minutes.
Jim
And they,
McCann, the
right?
CEO, the ex-CEO, the guy who just
Yeah.
stepped down. Yeah, and I want to tell
Well,
him how
no,
much I love him. I want to tell him
let's
how much
say
I
you
love
were
him. When I
stuck in
see
an
him,
elevator with a retail investor for 3 minutes. How would you communicate to them before the doors
well,
open up?
that's a bad analogy because I can't emphasize enough. I don't care if retail believes me or not. They can if they want. I would love it. I want people to make money. I want them to make
Well,
risk-free money.
what
But
what 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 he's trying to say though is just like give the quick pitch. So
sure,
maybe
all
not
right.
ritail. Like if you were in the
I
elevator
know,
with
I know, I know. It
McCann,
just
like
tells
you
the
With a
said.
story.
grandma or
Yes,
something. She
I
wants to
agree.
know where to put her
Yes,
money.
yes. Okay, all right. This is a great one because I went to school for finance, right? So I'm not, I'm definitely not like a hedge fund quality guy, but I at least have base round knowledge. And then I've worked 10 years in supply chain, and it's basically the same stuff because supply chain is just mapping out a total ecosystem of, these things turn into organisms, I would say, these systems. And that's what's so complicated about financial systems is we've built so many laws and leverages off of it and then different different firms that are supposed to track different things and they have different rules and laws that no one can keep track of this, but it's one of my favorite things to try to do. So I'm deep in the overall market as it works in general. I love analyzing black swan events, right? Because I'm a math statistics guy. My favorite thing to look at is statistical anomalies, and that's kind of what we're looking at here, right? So what we're looking at here is this stock is, when I went to school, I was taught that for finance, your best investment is going to be something that bridges the highest Sharpe ratio, meaning your lowest risk with highest reward. And you can get into statistics and figure out how do you calculate risk, usually using a risk-free rate, which that's a whole debatable topic on its own. And then you do calculations on possible gains versus on the volatility of the stock in the past. So the problem with this company is if I'm right about this black swan event, all past models don't mean anything. But if I'm even if I used past data, I still come to valuations or
Let me stop
yep.
you there.
Go ahead. Yep.
They
Okay,
don't
I
even know
think
what you're
people.
talking about yet. We're
Yeah.
still in the elevator. We're
All right.
wondering
All
when
right.
the fire
All
department's
right.
coming.
Hey, you know what? Here's a good one. I keep going into stores all the time to like a gas station I talk to all the time, and I say, "Hey, you guys into like Wall Street bets or anything like that?" I'm like, "Just take a peek at 1-800-Flowers, okay? Free money, I promise you. It's it had a turnaround. It was supposed to go bankrupt. They just posted that the turnaround's winning. They beat 40% earnings. The stock should have rallied by then, and it's weird how it's not rallying. So just take a peek and try to figure out why it's not, because you're going to smile big and be like, "Oh my god, I
But
see
okay,
exactly what's going on
let's
here."
say I don't want to take a peek. They're gonna say, "Tell me why. What's there to look at?" Give them the
Well,
quick.
so
You're in the gas
yeah,
station. You have quick.
it's all
What are you
about
telling
risk
them?
free. It's risk free. So that's the whole
Why?
point. Why? Because they can't go bankrupt. So, well, number one, let's start with if they were going to go bankrupt, they would have already. They just posted 30-40% beat to their earnings. Okay, this company it's a seasonal retail company that basically out of a whole year uses one quarter to make their entire yearly earnings, and then they use that to work off that capital for the year. Okay, I've proven with a bunch of evidence and stuff like that. Some of it's speculative, some of it's public knowledge, not even speculative. We can pull it up and look. No one's just looking, which is that private equity hopped in this at least back in February, and they put in a bunch of C-suite executives to help turn this company around to hit private equity targets so that this company automatically shows up in algorithms as underpriced and forces buy-in of big funds. This is a typical private equity strategy when you find an undervalued company. Maybe they helped short it to get it down to the lowest price. That's what I would do if I was there. But even if they did that, it doesn't matter. It just worked out already. They hopped in. They were able to over leverage their position in a company with a locked float from this family who owns 50% plus 10 times super voting rights. So that this company cannot go bankrupt unless Jim McCann capitulates. Okay. And he hasn't since
Let's slow
1979.
down. People
Sorry.
are very
Sorry.
confused. All right.
Yeah,
If
go
I'm
ahead.
reading, let me get to some of the comments.
Ask anything.
Native here is a little mad. He says, answer the question, Jesus.
I didn't see. Okay, I'm sorry. I was clicked
Does
on.
he understand anything but himself? Be a little nicer, but
that's fine. That's what my wife says.
a bunch
too.
of evidence.
She says
Lay
I'm
it
a
out,
complete
dude.
narcissist.
Alzheimer's alert.
I just talked to a recruiter a few weeks ago and he called me autistic. You guys are not wrong. Okay. You're 100% right. So
join the club. Join the club.
Claiming.
Let's break this down. Okay. Let's keep it simple. Why is it risk free? Okay. Like Daniel here says, risk free.
Well, you're confusing risk-free rate. Yeah, that's different. That was a different rant part. That's part of this. You guys are. I'm not focused because I assume everyone is on the same baseline knowledge as I am, but I forget that everyone has different baseline knowledge.
Yeah, someone who knows nothing about this. Let's start here.
Yeah, synopsis. The beginning of the book.
We're at a $259 million market cap.
I don't. Some people don't. Go ahead.
What the revenues are? What, like 600+ million, right?
No, more. They used to be a $2 billion company, but they're strategically trying to drive down revenue and increase margin along the way because Jim McCann in his effort to turn it around has been doing the opposite, which is chasing revenue at the expense of margin. Because that's a strategy too, right? That's what Amazon does. He really cares about this company and has big dreams, and it kind of failed. And he kind of capitulated and asked for help, and now he's getting it. And so it's going to turn into a different company. It is already. I mean, it's on the earnings call. I'm not claiming
what's the why did it kind of fail, and what's turning into a different company? What's the change?
So first of all, it didn't fail. Okay, you guys, everyone doesn't understand that these things are just based on valuations, right? So if you're a retail investor and you just want to make money, right, you're looking for something that has a market cap of X today, but it's going to go to market cap of Y tomorrow or whatever time frame, and you have strong conviction in it, right? So how does market cap change, right? That's where it gets really debatable. So in theoretical finance, you're taught to do all these fundamental valuations like discounted cash flow analysis, price to sales ratios. There's so many different ways to value a kind of enterprise value. All of these are different textbook ways to come up with what we call intrinsic value, right? The price of a company that the market's not seeing, right? Once you come up with that, you do that with a bunch of companies. You start saying, oh my God, this 5 companies have the biggest difference between the market cap and what I think it's worth. Then you start challenging all of the reasons why. If you feel really confident, boom, you go into the stock and you hope that the world agrees with you one day. That's how you're taught in finance. The intelligent investor, Benjamin Graham, Warren Buffett approach. Does everyone agree with that?
Sure. Can we circle back to just bullet points? What's the bullet points of known data?
Let me ask. Okay. Here's why I liked it. First of all, the downside is pretty mitigated because not only they make revenue beyond the market cap, they have multiple different businesses. It's not just flowers. They've been around for a long time. They do have a brand. They're not necessarily dying. Their revenues are looking pretty decent. So just in terms of a regular company, it looks good. And I want to get into the other avenues of.
Well, what about bankruptcy? Like, ask me, or not even ask me. Think about yourself. How could they go bankrupt? Don't listen to me, Rant. How could they go bankrupt? That's what got me a little interested. But what we really want to know here is how can it squeeze? What's the actual upside? Okay, so
and I want to discuss maybe if we can start with a little bit about, other than flowers, if you can tell people what do they do, because everyone just knows them for flowers. But you said also, they have like 10 other companies. I don't know if it's on their website here, but what else do they do? Do you know?
Well, some of their protected moat for non-bankruptcy. Okay, so again, any simple person can do simple math and they can look this up with public information and they can actually do napkin calculations and see that even if they go to bankruptcy, their assets are worth more than their market cap and they don't have debt with warrants. Like it's not tied.
So
They just paid
let's
off all
start
their
there.
liabilities.
Let's wait before we get too deep.
Good.
What are their assets that are worth more than the market cap? Because that just starts the baseline that this is pretty risk free. If if they're already at a baseline of the company is pretty undervalued just by the underlying assets, right?
Yep.
Forget the upside yet.
Let
So
me
what
start.
are the assets we're talking about?
Let me start with the reason why the market can't price these assets is because the reason why you also mentioned that once you looked into it, you're like, holy crap, they own a bunch of other random stuff, right? It's deeper than that, okay? Meaning that even within those particular brands, each of those one brands has strategically added value to their assets over the years on a book value, totally agreeable from any consensus you could look at basis that's not properly reflected in the balance sheet. And it's also why they're switching to non-GAAP accounting practices to show the market this, which is another private equity play, which is you basically, if you were to look into this as a regular investor, so if I was private equity 2 years ago, I would have looked into this and I would have done some napkin math and say, oh my God, they have 2,000 acres of this Harry and David potential orchards. Because about 2 years ago, they bought the orchards and then started planting stuff like, I don't know, 4 or 5 years ago. And once it turns to mature orchards, that land alone back then would have been worth the market cap. Fast forward to today, that land is worth even more without the orchard because land around that area is skyrocketing in value. Plus, it's an orchard. So just that one orchard alone is worth the market cap today more if you were to, because everything with real estate is arguable.
I'm gonna start cutting you off more.
Yep.
And let's try and get to things one at a time.
Hey, read Vassie and C's questions.
Yeah, I'll read his questions. And double parter. All right, back to the assets real quick. The assets are worth about 2 billion or so. Just quick, like just from what what are they worth more or less?
So like
estimate number.
That's where it doesn't matter to me because just one asset alone is worth the market cap.
So a lot. That's the answer. A lot.
It doesn't matter to me. Just add on whatever other.
No, but it does matter. It does matter.
Well,
what the other ones are worth.
Well, you got to remember, you told us to ask you questions, so we can't ask you a question. The answer can't be it doesn't matter. Just throw out most people know nothing about this. Just throw out a random number so we can move on to the next thing.
You're not wrong.
And it does matter though. I'll tell you why it does matter. Because what if the other ones are negative, right? So even if this one is the market cap, what if the other ones are negative? It negates,
So that's the only way they can have a negative asset is if they had they owe debt to someone, right? Everything else, you can't. If you own I'm talking about physical assets here. So that's where it gets complex in a normal situation, right? So like if I were to value any other company, me and you could argue all day because I built the valuation off of 30 different assets. Each one of those 30 could be worth $1 or 1,000, and you have to battle all of my points, correct? And then just
to catch somebody up, because people are hopping in, just a quick synopsis. So I met Trevor about a week ago because he made a very good point about 1-800-Flowers, ticker FWLS, FLWS, excuse me. And from the information I saw, it looked pretty good. Like the downside seemed pretty minimal, and it seemed like he connected some interesting dots. Everybody looks at all the stuff that's squeezed, like GME and all that stuff. Like it's like garbage now, or maybe it's good, whatever. Some shorts, bulls fighting chronically over the years now. But this one seemed kind of forgotten. Like like a thrown away wet dog where everybody's like, oh yeah, that squeezed one time because people bought it a lot because everybody was dead during COVID, and it had a little meme
Well,
rally or something.
it's not about
But
forgotten. There's a lot that goes into it. Let's
yeah,
get a
this
little
is just
into it. But
just a general cursory glance of the lay person, just like what is
All right.
this? You know what
All
I
right,
mean?
so let me
So,
back it up with a proof of something. The reason why I'm sorry for sounding like an autistic Rain Man. You guys can totally criticize me all you want. I'm totally down for it. Okay, I
no
get it
worries, no
every
worries.
day.
it's okay.
No,
Try
I need
having
it. I
a
need it.
conversation with
I need it.
Einstein. It was probably weird.
Well,
Whatever. It's all
I'm not
good.
saying I'm an Einstein. I'm saying I'm definitely probably have autism, and hopefully that's why I'm able to, not explain this to people, but understand it myself. It would make sense to me.
Well, that's
Okay,
why we need to break it down slowly and by
yeah.
questions
Okay,
and answer questions
sure.
directly.
And I'm
But and
sorry
I want
to
to get to the
sound so
comments here. But
conf-
real quick, who is
Good.
Quickie Ricky? He just joined the stream here. I don't know
That's
how he even got the
probably
link.
my buddy. I think I
Okay,
told one of my friends. I bet that's
sure.
him. I told him
If
he's the
you want to
one.
unmute yourself, you're welcome to join
Yeah,
the
if
chat.
you have
I
any
know we're a
question,
little
anyone.
bouncing all over the place. You got to just interrupt Quickie Ricky. But let's get to the chat here real quick because there's a lot to discuss. All right, actually, back to the assets, just real quick. If
I
you
have my
can't throw a
screen
number,
up.
what's the
No,
total?
I can, guys. Okay. I'm sorry for sounding so crazy. I'm trying to explain it in a way that, like, normally in any other company, I'd have to spend a long time to go through each of their assets and prove to you that each one is worth what I'm saying it is, more than the balance sheet or worth, because the
You don't have
balance
to
sheet.
prove. Just
Oh,
give us
well,
the number.
Yeah,
the whole reason.
your intentions
No,
are
no,
very
no.
good. We don't need reasons why. Just tell
well,
us the.
I'm just
The-
saying the whole reason I keep going back to just focusing on one, because if you just pick any of these one assets, the valuation is at what it's valued today.
I know.
So then,
but what are they all together, more or less? Estimate 1 to 3 billion, 5 billion. Like, just give us a number, just as a baseline.
can you see my screen? Can you see my screen?
I'll pop it open. Yeah.
Are you seeing what I'm looking at right now?
Yes. Harry
Okay.
and David Orchid valuations.
Okay, so they bought Harry and David for 142 back in 2014, right? You would have to assume that Harry and David is going bankrupt if it's worth less today, right? Or even if it's the same, then at least it's not going bankrupt, right? So pick your poison. This is either worth this, or it's going bankrupt, or it's worth more. There's no other way around that with logic. Okay. So it's at least, and then the reason why it's worth more is because this isn't accounting for the mature orchards. This is accounting for the raw land in 2014. Okay.
I get that. Why are we pivoting so much? Can we just get to the final? Like, you're giving all this context.
Because this is half of the valuation.
It's okay. The answer is there's lots of companies, and they all have different situations. Some are probably doing all right. Some are probably not doing all right. I think that's the answer to the question.
I think the math is so easy to me that it's not making sense to you guys. Okay, so they're at least worth
Imagine a bedtime story from this dude.
My poor kids. My poor kids.
He has 5 kids.
They get it. They understand 1-800-Flowers. I tell them all the time. All right. Let's say this one's worth 142. I think it's worth more, but that's what they paid for it in 2014. You have to assume it's going bankrupt and Harry and David's is not working if it's worth less today. Right? That's why they would have overpaid.
I get that, but I there's so much other stuff that I have contextually to just refute why this doesn't matter too much.
Okay. How about their cash?
And I feel like we're going into super details. We need to give them the macro still. Like Vast here says,
we haven't even done that yet. Yeah,
and we haven't even gotten the thesis yet. So let's give the thesis. Let me try and explain the little that I understand yet. Okay, my quick thesis, and tell me where I'm off. And let's just try and keep it macro.
Just real quick too. Let me just say, just cash alone from the last earnings call, they have almost 200 million in cash. Right? They're valued at 246 million market cap. Just the cash alone is the market cap. If you add in Harry David, that's another 142.
That's beautiful.
If you add in, this is a $2 billion company.
I get it. But we still need a lot of the other juice. Okay, even if they have 2 million in cash, do they have debt? Are they operating badly? If you gave that 200 million in cash to the government, it fucking goes away in an instant. Okay,
They
if you
don't
give it
have
to
debt,
Elon,
so
it will scale. Okay, so it
it
matters
doesn't
who.
have
I
to
don't know.
scale. It doesn't have to scale. It's underpriced today. It's
Cash is already losing value in and of itself. So where is that cash being sitting? Like,
But this is a company that is priced for bankruptcy, and just in one quarter has enough cash more than their market cap. That would normally mean an instant price appreciation back to its real value, but it's not happening because there's a
but wait,
potential
let me
gamma
ask
squeeze
you:
that
Is
market
this
makers have to stop.
why? What about before last quarter? Did they not have that cash? Is this just something new that came up?
Correct. So
So
you
this
can listen.
and no
I
one's realized
recommend.
yet.
Well, they have. Everyone has jumped in. You can look at the Fintel and the 13F filings right before earnings and right after earnings. Basically, so they're in Q2 2026 now. They have a different calendar because retail gets to make their own calendars. So the last one was Q1 2026. You can go. I would recommend you go listen to the earnings calls. They're not long. And the first one talks about how we're trying to do this strategic pivot, and they very vaguely pretend like they're not so confident it's going to work. Okay. Then in this last one that just dropped last month with earnings, and they beat it, you can listen to the earnings call. They're so excited to tell you we're not only are we beating our plans, but it's going to get way better for the future. They found like $16 million that they didn't even think existed before. It's the same story of the private equity person that's behind this, which is that other YouTube video I recommend you guys watch. You see my screen. This person here, Michael Jacobson. Like, if you don't believe me, maybe you should just watch this video. He's not as Rain Man as me. He's probably as smart or smarter, but this is how you turn a flower shop from $600,000 in value. So how much X is that, right? That is at least 10X. So if he did this with a small one, pick your poison. What he's doing now with this one, this is the guy who owns the family trust of 1-800-Flowers that he's trying to siphon out of the float. It's
Let's
already
get to the
constrained
real
already.
stuff though, because I mean, this is a little unrelated, and getting 600 to 9 million is very impressive, but getting 9 million or getting 100 million to a billion is a whole nother ball game. Ask any rich person.
That's another thing. You're conflating market cap with valuation. Yeah. So if you add up just the balance sheet, you don't have to take my word for it. Anyone can just pull it up online.
No, I get that.
Yeah.
So let's see. I have your screen here. Let's let people see what the numbers are and everything you're talking about. I just wanted to get a little of a baseline of the assets are worth well over the market cap already. So that alone makes it risk free. But now, what is the short squeeze upside here? There's a lot of shorts too. So even though the market cap is worth that, shorts do bring it down. So there is a fear of, who's behind all this? What's going on? Are they, the BlackRock, they got unlimited funds to keep doing this?
Yep.
What's the catalyst for them to stop doing it now? And now we're going to go on a big rally, like you believe.
And it's an excellent question, Matan.
Yes, and that's why this thing is such a complex story that I need everyone to challenge me all along the legs. But I do feel like it's good that we're letting my Rain Man-ness at least get out, and then we can, let people argue or check things on their own later and just get a little bit more organized as time goes on. But so your question is, hey, if everything you're saying is true, how come the market hasn't realized and this thing is still trading at like $4? In fact, it's gone down since I talked about it. Do you remember that? I started talking about when it was 5. Do you see my screen right now?
Mm-hmm.
Okay. So I kind of started talking about this back in here. And I was so excited. I was right on a lot of stuff, but I didn't get the full story. And when I started seeing this here, I was like, oh my God, I'm right. The squeeze is coming. I was so excited. But I didn't understand the full story, and I'm getting it now, which is that, just to break it down in layman's terms, that just like we've seen with every other short squeeze in history, market makers have legal right to stop gamma squeezes from happening. Not only do they have the right, that I would argue it's ethically what you're supposed to do, which is you're supposed to set legal laws in place so that they can, in a sad way, force real small retail investors who were long this company to sell their shares right before it price appreciates. It's kind of sad. They're really stealing money from people. I wish it wasn't this way, but they would argue the reason they have these laws is to stop scammers that people think Trevor is here trying to go online and say, everyone, let's jump in this stock and pump it, pump. And then that's not real price appreciation. That's a synthetic squeeze where it reverts back to a normal price after all the volume is done. This is different. This is, I don't need retail here. The volume is there. The market maker is using their market maker exemptions every day to stop the gamma squeeze. And they're supposed to. That's what they're supposed to do. Now, the other question is, how long can this go on? I can tell you exactly how long this can go on. And then I can tell you with high confidence where it might break before then. So
before you do.
Yep, exactly. I don't want
before you do. Quickie Ricky over here. Can we hear from you? Apparently this is your friend, maybe.
I think it
Did
is.
you
I don't
know
know
about 1-800-Flowers? Can he give a little thesis? Maybe we can hear from him.
Arthur.
Actually, we have another one here joining us. Crispy, Vast CNC in the chat. What's up, buddy?
I don't even know if y'all can hear me or not. I've never used StreamYard.
Yeah,
You're
actually,
good.
this is the very first time I think I'm seeing you on camera here. Oh wait.
Oh shit! I'm doxing myself. What's going on, y'all?
I did too.
Okay, let me get this straight. Valuation of the company. We have asset heavy. It's not priced into market cap, correct?
Yep.
Second tier, we have private equity that's suppressing the revenues in order to kind of create that juice for the re-rating, for the repricing eventually.
The private equity's in here for a turnaround play. What they saw is yeah, and so one of their ways is to strengthen balance sheet and standard KPIs that big funds have to look at, so that the big funds have to invest in it. You know, the typical private equity.
Let's keep this simple. So we're looking at this, right? Okay, private equity or whatever people who are in there, they're incentivized to keep this spring coiled.
You're talking private equities. That's just one of their ways to increase value of this company.
I know, but we're keeping this simple. We're keeping this.
They're not doing anything. Okay, so in terms of the squeeze part, that's the constrained flow. And yes, that's why they're here. It's an extra protection layer for them, meaning that they don't have dilution risk when they do this with a family who owns 10x super voting rights of constrained flow.
Okay. So baseline, spring coiled.
Yeah.
Right?
Correct.
So we're dealing with the coiled spring here.
100%.
And they have every bit of incentive to keep this spring coiled as far as it goes, right?
You get it.
So we have our baseline right here. Our baseline is the fair value of the underlying assets. And, you know, the orchards, the land, the real estate, maybe the trucks, maybe like everything else that they have as far as infra and their fair value of the company. You have the market cap that's actually kind of like below that. So we have this kind of pressure that keeps the baseline fair value of the company. And then we have another layer on top of that, which is the private equity or the market makers, for lack of a better term, that are keeping that kind of like spring coiled. Okay, what's the mechanism that pops the spring?
So what I'm saying is the spring is already popped, but they're using market maker exemptions to stop it, to slow it down, because if it would have let it pop back in December, the gamer squeeze would have been huge. But I'd love to think I'm doing this, but I'm probably not. I think other big fund managers are seeing what's going on, because I'm watching the options chain. Every time they get real close to it breaking, all of these people who had these options for the last expiry just roll them over to the next one, and then it just keeps getting tighter and tighter. The number of shares they can't locate just keeps increasing. We're at a breaking point right now where they missed this FINRA reporting. This is an important one that I'll get into. This is one potential breaking point that you might like. They missed it for 3 days in a row now that they so this stock is so synthetically traded back and forth, and I don't have to prove it to everyone. You can just watch. That the pressure, they can't locate so much shares that they're using
the float isn't large enough for it to do the mechanics. that what you're saying?
They built derivatives on top of an already constrained float that made them trade shares that didn't exist. As always, this happens all the time. So that's why like people keep asking me, so what? Like that happens all the time. It happens in GameStop. Yes, it does. And
I gotta change my layout. All you guys
Go
are in
ahead.
landscape. I feel like
Yep.
a noob.
The only difference is one, is this going to last forever? And two, is it legal? So which one do you care about? And I'll answer. Is it going to last forever? Is that what you want to know?
No, what I want to know is, so you're saying, so we have the coiled spring, right?
Mhm.
We have the coiled spring with the fair market valuation and the market cap itself. And the spring popped a little bit, but that wasn't the real pop, is what you're saying, right?
Well, also, I see this is where it gets complicated because
I know, but I'm trying to simplify for
well,
us.
fair market value has
but the
nothing
pop
to
wasn't
do
poppy
with
enough.
trading. The trading has nothing to do with the market value right now in this instance because there's a reason why the price is pinned right now, but using market maker exemptions because the market has already agreed and they've already bought fake shares. The demand is already done. The price appreciation hasn't happened yet because of market maker exemptions. The laws that they have to stop the gamma squeeze from happening. The more that they can, I like to use this analogy, shake the nut tree of any contracts that are layered up to cause this squeeze to be nuclear, they have to shake that tree for as many days as they can to lower it as best they can. Price appreciation is coming. The question is, when is the pin getting pulled? I have a final date where there's no option possible. It has to be pulled at that time. And then I have dates before then that might happen as well.
So are you saying that they're shaking the tree to try to get that liquidity that they need for the float in order to, like, because you're saying that, like,
reasons.
the
Every
float
time they
isn't okay. So the float isn't high enough for the mechanics of like what they're doing. So these tree shaking events, is that to free up the shares in order to, like,
they're missing shares. There's over 150% being traded back and forth of what's really available. That's called synthetic shares. Okay. This is like I'm in supply chain and in my system, it says I have 200 iPhones at my warehouse, but then I start shipping them. And for
let's
some
say
reason,
flowers.
200 okay. I start shipping 200 flowers, but for some reason, like I put the orders in, but they never ship out. And I'm like, what the hell is going on? And then the demand keeps coming. So to my bosses, I'm like, look at all this demand I got, but it's synthetic demand because I don't really have the supply. Doesn't matter. Yeah, it's a level 2 or level 3 order, just like you're seeing in the stock market, and that's how they pin the price. It's fake demand.
Quick questions here from the comments. Tebow says, okay, it's complicated, but how do we benefit from this? In simple terms, please.
I'm trying, man.
Yeah. So I wanted to start with number one.
And one second. Zen Z Stacker, to his point also. So for correct that, is it long or short trade? From what I understand, is it GameStop, but is price lower than assets?
So this is where I'm trying to be as fair as possible, guys. I'm not the oracle, right? I can't predict the future. So all I can tell you with I'm a stats guy too. I'm never going to be 100% confident. I'm 99.9% confident that you will never lose less than it is today as long as you don't sell it for intraday price. Because the intraday maybe will dip, as we see it all the time, dip to like below the $4 or whatever. But it's a ladder up constantly. This is a risk-free trade, and it's because the market has already agreed that this is no longer a bankrupt company. Hey, I'm DA Capital LLC. I want to buy some shares. They start buying some. That's why we're hitting this market making.
Based on that thesis,
people have bought shares already that don't exist, and we're having trouble accounting for it. The audits are already breaking.
Okay. So we're buying shares, first of all, not options.
Right? If you want to, you can do whatever you want.
I mean,
but it's less risky because they have a lot of laws to keep the price pinned. So let's say I have options on February and I have options in March because I can watch every day if another brick in the wall is breaking. And that's another thing. In a normal stock, the IV will fluctuate based on the price. Watch this one. My contracts haven't moved. I have $7 contracts that haven't moved in price, whether the price is $5, $4, $3, doesn't matter. IV stays the same. Why is that? That's because the market makers have to use contracts as well to, if this squeeze does happen, not cause a nuclear explosion. So IVs are already high, but that's where it's a battle, where we don't know when the pin's going to break. So I can most likely keep these contracts to the last day. They'll still have the high IV, and I'll just roll them again. And I'll just wait for this pin to break. And then the final pin is June. And if you want to know, because before that is a lot of things that this Rain Man idiot will try to explain to you and you won't believe him. That's fine. But the June thing, I think everyone would probably agree with.
And is June going to be reporting for Q1?
That's why the total return swap was signed with an expiration on June 18th.
But what are they reporting Q1?
That in June will be the end of their first turnaround fiscal year. So private equity is hoped when they sign this total return swap.
So they're not on a standard like fiscal year?
Correct. They're on Q2. They just did Q2 for 2026, and we're not even in 2026. So they have a different fiscal year, but like either way, I hate it when they don't do a standard fiscal year because then you're like, oh, Q1 or Q2. But like the Q1, which is their quarter that encompasses February, I'll call it Q1 because that's just because I'm a fucking normal person. Yeah.
But like their February quarter will be reporting in June. Their Valentine's quarter, for lack of a better term. And
in May, and that's when you get Mother's Day.
Mother's Day is in May as well.
Yep.
But they're not going to be reporting on Mother's Day in May. And also, that's going to be Q2.
And also that's
or Q4 or whatever the fuck they call it. But Q2 for normal people.
Yep. And then that's not you're going to get this part and you're going to love this part because you're on similar level here with me, which is that's not the point of this company and why private equity is here. So as you know, with seasonal companies, when you have earnings are negative 3/4 of the year, earnings are positive one. That's why for 30 years, this company's price goes up and down like that, right? It basically depends. Like, hey, you guys spent all year. How are you going to do in your favorite quarter? Oh, you did okay. Okay, price goes back. And then we got to wait a whole nother year to readjust, right? Because the other earnings don't mean shit. Private equity's here because they know that if they could just make every earnings even zero with no net losses, the stock 10x's overnight.
So this is not impacted by the downfall of discretionary spending or any of the other kind of K-shaped macroeconomic horseshit that we're dealing with right now, where people can't afford to buy flowers for their girlfriend. It's already priced in.
Yeah, just add the napkin math. Any napkin math you want to do. And then you would say, why is the price? I
prefer graph paper, good sir.
I prefer a TI-80 if you have it. Get those
a Casio.
I love it.
Watch. There we go.
There we go. Where are you from?
Utah.
Okay. All right. So I live down the street from 100 Flowers.
Oh, yeah.
Oh, this is Big Flower, dude. This guy, he probably works there. He's trying to pump this jam.
Now let me tell you my story, which is,
dude, you should go and get a site tour of the place and show people.
I'm gonna take pictures.
$1 billion facility. Look what we have here.
I stumbled on this because I'm in supply chain. I'm always looking at open roles, and I saw open roles for data AI scientists at 1-800-Flowers down the street, and I'm like, what? That don't make sense. I know this company. I've been thinking about
going quants.
Yeah, I go. I sometimes I think about that when I want to retire. What quants are going there? I started looking up. They got this. The guy that they got for the CIO is a really cool PhD guy, all about real deep statistics.
Is he from Jane Street?
No, he's not. They're from private equity circles. They're in the same. They're part of a Olslon law firm. If you know them, they're a strategic law firm that was around for GameStop as well. This is what they do. They bring all of the players around needed to turn around a company. And then if they can, they squeeze it while they're doing it.
Z Stacker says the thesis is complicated. And for that reason, I'm out.
Yeah, that's why I had to just put these random videos up of me, because I understand I'm probably not going to convince anyone, but it's going to happen. So I'll just watch.
Okay, I can kind of see this as like three kind of tiers of like, if I'm simplifying this down to basic kind of like what the thesis is. First thesis, fair value is detached from asset value. Correct. Or market cap is detached from asset value.
Correct.
So that's your baseline, and that's why when you say this is risk-free, which whenever anybody says risk-free money, I always like, huh? Like my red flags pop up. Yes. Like this is risk-free. Yeah. It's just that's the famous dying words.
Like I said, 99.9.
You can look at it yourself and you can kind of count. Okay, maybe if this thing went to zero and they sold off all their assets, they're still worth more than their market cap. Mm-hmm. You're still good. So there is a baseline here that you're saying is the ground floor of this play.
Yes, and it was when I got into it too. I got into it at like $3.
So that's your ground floor is the the fair market value of the company is your ground floor. Your second is like the quant aspect of it, of like, I say private equity just because that's the only context I know, but the actual mechanics of the trade, like when we're talking about the synthetic shares, when we're talking about like the float and everything, the mechanics of the trade is coiled up for some financial engineering that might have an upward pressure trend. But the third tier is we don't know when that coiled spring is going to pop. It has already popped a little bit, but you're saying that that's not the big pop.
Yeah.
So what are the catalysts that you're watching for the next stage of the spring?
All right. So first of all, the guaranteed one is June, when they signed a 3 million total return swap at a price that they purposely drove down to as low as it can in October. And then they dumped 3 million shares on the market to bait the shorts. And then they doubled down, and then they reported this earnings. It's freaking perfect. So do you know what a total return swap is first?
I don't, dude. I am just
all right. Total return swap. Let's go to that. Okay. So that's the same thing that was often speculated about GameStop. Okay. Total return swaps are also, have you heard of Archegos Capital or Bill Huang?
No, I am not like a financial guy.
No worries.
I am new to the markets.
Don't worry about it.
I only know a few, enough to be a little dangerous when it comes to my portfolio. But like the actual financial mechanics, I'm interested to learn.
Have you been watching the Jeffrey Epstein tapes that came out with him and Steve Bannon and stuff?
Not really too much.
All right. He gives great
it's interesting, but
of the economy, the credit market, how it works, how they leverage themselves legally, how they get themselves into holes, and how even when it breaks, the person who got themselves into the hole still benefits, and the bag is always you. Yep.
The Big Short. I've watched that movie.
Of course, yeah, he was involved in it, yes. But The Big Short doesn't explain exactly what happened. It tried to sensationalize it because it's complex, but it basically boils to this, which is
so total return swap was category one.
Okay, perfect.
Topic one.
Yeah. So total return swap is a contract. That's where they call it a derivative. It's only called a derivative because it's layered on top of the asset, but it's not tradable in the market, right? So you can't account for it with normal market math, right? So that's how there's hidden float mechanics here, right? That's why there's more shares missing than what can be reported, because there's a total return swap that was signed in February. There's an SEC document. I can pull it up by Fund One.
So that's where 150% synthetic shares. That's the mechanics behind that. And this is the total return swap what reconciles that synthetic shares and then forces it back to baseline?
Basically, if you go into Fintel and you see that it's at a 99.7% short, add 3 million to that and redo the number, because they cannot add the total return swap into that number. They're legally not allowed to.
But that will be forced to. It's not re-rate, but that'll be forced to like.
It's a philosophy. Now you get into philosophy. What does that mean? What does that mean? You have a contract. It's just like options, right? How do options volume impact the price of the underlying layer? Because it's a derivative of that asset. It does have an impact. Most people don't understand it. This fucking idiot Rain Man does. No one believes him. That's fine. But basically, it just creates pressure more, right? Yeah. Okay. So if he has the option at June 18th to say, hey, thank you for holding my shares, and you gave me the same risk-free rate to hold them. So that's what a total return swap is. Hey, hold my shares and pay me interest on them until I ask for them back. And 1-800-Flowers was priced for bankruptcy. So the borrow rate plus the rebate is what he gets paid. This is his credit line. He gets a line of credit for letting them hold these shares. Okay. So he's getting 3%. He's getting 3%.
Yeah, and this is the same mechanic of like when you have your shares, and like, let's just like for simplicity's sake, like a hood rat like me. So on Robinhood, if I'm in a cash account, they can take my shares and then they can borrow them for the derivatives market.
They're doing that
get a return. You get a percentage return based on like your borrowed shares. You still retain ownership of your shares, but it's borrowed for derivative mechanics. So this is like the same thing, but at the corporate scale of like.
And they're doing that here too. But the reason why they needed a total return swap to squeeze it more is because this company, since 1979, has already been a very small float because of the unique ownership and the amount of retail investors that are into it.
And we're talking about 50% insider ownership with, you said, 10x.
That's just the family. Yeah, that's just the family. Then there's also everyone in the company is incentivized to like buy into their shares. So most of
Wait, 50% is the family, and then we
Yeah.
have the
Yep.
employee owner, like the stock option employee, is in addition to that.
Yep.
So like if we're taking half is a family, and they're like the
Fintel-
10x controlling shares, and then we
Like,
have
you don't even
do
have
you know
to do
what
this math.
section is the employee?
Fintel does this, and they do it correctly. If you go into Fintel, that's why they come up with 97%. You'll get the same number if you do the math you're doing right now. And that's why if you go on Yahoo Finance and stuff, you get a different number because they don't add into the family stuff, the institutional holdings and stuff like that. Fintel's doing it correctly, but one thing Fintel cannot do is add in the coiled spring that you're talking about. When you have a coiled spring, it's because you're trading synthetic shares back and forth, which means that every day you're possibly missing some more shares. Sorry, you're making it worse. So they have been missing even more since probably 3 months now. And then also the total return swap. 3 million shares are not accounted for. It's a derivative contract. It's not part of the open market because it's not real. It's a contract saying when he wants them, he can ask for them back in June. Once he decides to ask for them back in June, if he did it, he could also do it today. If he did it today, it would trigger a squeeze.
So the 3 million shares, the synthetic shares, the total return swap,
It's not synthetic.
that's your next.
It's a contract to say, give me my shares back. I told you could hold them.
Yeah, I got you. But that's your spring launch. That's your
because they can use those shares that they're holding for him to make their synthetic whole even worse. That's what they're using to trade back and forth.
Hypothetically, he can do this anytime before June.
Yes.
So the squeeze can happen basically anytime
Also,
from now till
both
June.
options. Both the counterparties have the option to pull it now. And that's why you see such a battle every day. Both can't decide when it's going to hurt them less or more, make them richer or more. And it's a battle every day in the level 1 through level 2, level 3 order flow.
One thing you almost touched on earlier, can you circle back to that, Trevor? The same law firm that was in the GME situation that set that up, and then the five
Aslan?
guys.
You said Aslan, correct?
Yeah.
How do you spell that?
OLSHAN.
If you want to share screen and show any of it, I can pop up in there.
And then I believe that tied into the five guys that accumulated like exactly 10% of the company collectively to work as a potential organism. Something to this extent, yes.
Well, I don't. Oh, yes. Okay. So, yes, they are actually.
I got coffee. I'm still listening.
Yeah. That's the investigative journalist part of it. So, number one, I have an SEC whistleblower complaint filed because there is most likely some illegal stuff going here. There's nothing like explosive. I'm not going to change the world with any of my SEC whistleblower complaints, but they are enough to that. One, I'm hoping to put a wrench in what they're doing to stop them using their legal ways to keep it going. So one ways I did that was file an SEC report so I can keep referring back to.
Why does the company themselves, do they see and get the report, or that just goes to the
it just causes a flag for someone to take a peek.
Oh, okay. And
it allows me to talk about my speculative claims without suing me later, because you can't say that I did it. Not only did I didn't claim this, I gave you evidence. No one's called me. It's not my fault. I'll keep saying that it's speculation until someone calls me, but I gave tons of evidence. No one's calling me. So, and then I also E-Trade. I called E-Trade to force them to look in this, to give me those 3 documents that prove that they're not loaning out my shares. If they come, they have 1 to 3 days to get back to me. I spent all day talking to them on the phone. If they come back to me and say they give me the documents that show that they have not loaned out my shares, that actually will throw a wrench in my thesis. A lot of big parts of my thesis, because I don't understand how that's possible. So I'm really waiting for those 3 documents. And then I also today submitted a FINRA complaint, because this is the 3rd day of them missing their FINRA exemption shares they can't find daily report. You're not allowed to miss that for 3 days. After 3 days, you got to do forced buy-ins. Even if they have to buy 1 real share, that means turning off the bots. If they just turn off the bots, it squeezes.
Yes.
So that's interesting. How do you know all that? And then The fact that you're filing all these reports every
It's
day.
weaponized autism. Okay, what we're doing right now is we're trying to like peek inside a Rain Man here and try like, well, how do you know? And he's like over here. I gotta call E-Trade to make sure that they can switch the switch so I can make my pump mechanism trigger the bots.
I'm just getting angry. I'm getting mad. Like, if you want to be ethical about this, I don't know how much time you want to spend on this. I've also challenged, how is this possible? How would a rare event like this happen where I'm the one guy who can see this? How is it no one else believe me? And I must be wrong, right? Because I'm half of a Rain Man. I have to think about all these things. Either we're in a black swan event, which is my favorite thing to watch, or I'm wrong. So one of them is true. It's a binary, simple event. And if we're in a black swan event, I'm in supply chain. I like to pretend that I like to play with stock.
That's good. That's good. Back to the law firm that was part of the GME squeeze, and then the 5 guys that own 10% of the company.
And yeah. By the way, Sammy says to you, Crispy, that your YouTube arc is beginning. That's right. It is actually the first time I see you on YouTube, and let's see if this Black Swan event is happening. We will definitely be live streaming more of these. And Crispy, you're always welcome back.
But what I need to do, because I'm using my AirPods right now, what I need to do is like set up my microphone so like I look like professional, like you guys. Just be like, yeah, but it's really going.
Dude, you can leave it like that. It doesn't have to be on.
Just LARPing. So tell me about the day-to-day.
Look, he's literally got a microphone and his AirPods on. Who knows if the mic's even on?
No, like that. I can't get the freaking phantom power, but that's the track. I can't get the phantom power to work on my streamer thing. So
GME law firm, 5 guys that own 10% of the company.
Yeah,
also,
I got a Reddit post up.
Didn't get to Tebow's comment though, but great point. Well, this company's been around for 25 years, and it's down 75% in 25 years.
How did they have reverse splits? Like, let's talk about the like historical mechanics of that one.
No.
But let's after we get to the ocean thing.
Yep. No, there's no dilution. There's no possibility of dilution here. And it's because the only thing that we can speculate here is if you agreed with all my points and what's happening is happening, what's the exit plan? And then that's a whole nother conversation.
Here's
you
what
you have to have a liquidity exit event if you agree with all my points in your private equity or the guy that I'm claiming, your Alslin law firm, all these people, if they're spending all this time and all this money in this, they don't hold shares forever. They want an exit event as well. So when is that? And that's a whole nother story. My fucking idiot Rain Man is having so much fun trying to figure this out that's why I'm so excited. But I don't have to convince everyone. I just need to make sure I document this because it's happening in real time and I've never been able to do this.
You told me the other day it seemed pretty easy to articulate the that one video you guys put up earlier about that guy that turned the 900,000 to 9 million or whatever. Yeah. That guy is part of another family in the same area that owns a business, and they're kind of joining together potentially at some point. And the idea is that when the stock price gets to the $64, then at that point they'll trim a little bit, but they're going to use that as equity to facilitate something else like a loan to get more money or something.
Yeah, basically no matter whether they're coordinating with all the other players here, which I would argue they probably are, at least some of them, and then some of them might have saw the blood in the water or something and hopped in to play the game. But for sure, Jacobson Mitchell is the one who stands to take over this company, meaning like operationally change its valuation, all of the plans. It's most likely this gentleman. And there's a YouTube video that he did this with another flower shop. His family is a billionaire family. His family is connected to the same funds that are around here. They all go to the same synagogues, on the same Jewish philanthropy here in Long Island. I know these people. I know their names. And that's how I was able to piece this all together. I work on the North Shore in Port Washington, which is right next to Great Neck, which is where the Jacobson family lives. They're very famous over there. Same with the McCann family. They're just down the road in Oyster Bay. And I know the people they hang out with. I know who they talk to. I know what synagogues they go to. I know what philanthropy groups they're on. And it helps me add the evidence trail of how did they meet these people? Oh, I know. I found a document where they met at this group back then. Okay, that makes sense. And then I've pieced it all together. You know what's helped me do this too?
Go to the synagogue and talk to them.
Yeah.
Yeah.
Yep. I've already. You've seen all the other weird stuff. I've got John McCann to like my LinkedIn stuff, and I've gotten a bunch of other weird guys on.
They're
LinkedIn.
very welcoming if you talk to them.
DJ is gonna be
you know?
at one of the fundraising dinners with like a cocktail thing and a headpiece, being like, "Go, go, go!" They're talking about the squeeze. Go, go, go.
Well, if
I want to give people real quick the real thesis here. Okay.
Go ahead.
This is the thesis in visual because we've been very much just bouncing all over the place. Okay. The stock is at $4. The prediction is by around June here, we're going to be at 64, or what was it? 68, I think. If you zoom out a little, this is what a squeeze looks like. That looks really
are we
sexy
really going to
me.
hit this kind of a squeeze though? Because I could see like a 2x squeeze, maybe even a 3x squeeze, but like a, what would that be? Like a 200x squeeze?
That's what we want.
No one.
That's why I'm wearing flowers today. I never wear flowers.
No one wants my opinion because it sounds too crazy. So I keep trying to base it in something everyone else can understand and agree to. Because if you go by what my models are predicting and the evidence that I think I've gathered. So I'm tying anecdotal evidence with statistics, and I think this thing is going to squeeze at least temporarily to like $100 or more. Whew. But that's just me. That yeah, that's just me. And also, it's not crazy. You know, they traded at $30 a share during COVID, and they were the same company. They just had one good year of sales. You're talking to what I'm explaining is a new company. Okay, they're a new company since Q1 2026, which is their Q1, which was 6 months ago. You cannot look at this company prior to that date. It is a new company now, and that's why they're suppressing the price so bad, because even Vanguard and every other big retirement fund can see in their algorithms that this is a different company. Oh my God, their earnings change everything. Let me buy some shares, and it's not letting them.
So it's kind of like delaying a re-rate.
Yes. Well, because someone layered, go look at the options right now. You want to pull up an option, pull up any options chain so you can see the layered options.
You can, I'm showing your screen if you want to pull that up.
You want to see unusual whales? It's really scary.
Tebow says apparently insiders have cashed out 10% of shares in the last weeks. Why would they do that if they were convinced this could squeeze big time?
That's incorrect. I don't know what you're looking at, but you might be looking at the when they hired a bunch of C-suites, they gave them 13F filings to give them shares in the future, options, which is what you do when you try to get top talent in the world, but you don't have the money for it yet. You give them contracts like a total return swap contract to get shares in the future when it's valued at $100.
Tebow and Z-Stacker, or anyone listening, if you guys want to join, just like Crispy here, you guys are
I got my caffeine. I think I'm going to need some nicotine to keep up with the tism.
Yeah, this is very confusing.
So mean to me. I wish my wife was here.
I see it from love, okay?
She would love this. Oh my God.
As somebody who gets that shit every day of like, you need to be on meds, bro.
I know.
Like, I say it out of love. I share the same proclivities.
It makes me mad because I look at other people as dumb normies, and I try not to. I'm sorry. But I do have a bit of a autism and a bit of a narcissism because of it. So I try my best.
That's a dangerous combination, my friend.
It is. I know it is. I know. I thank God I have the best wife. She smacks me in my face every day to tell me I ain't shit.
But that combination has also made Elon Musk, Mark Zuckerberg.
This is my midlife crisis moment. I don't want to get too deep into this, but basically my whole life has been, Trevor, you're a narcissist. Okay, you're probably kind of smart, but you're not some special guy. So stop. Scale it back. Well, I kind of had a midlife crisis where I'm like, you know what? You don't have to scale it back and still not be a narcissist, right? Just be honest. You can have bold opinions and throw your wild fucking theories out there. Just have some evidence and let people argue about it. Because another thing that's pissing me off lately is none of us can agree what even truth is. None of us can even agree what happened during GameStop, and that was fucking 4 years ago. And I'm getting so mad. So you guys don't understand me because we don't even start with the base layer of knowledge.
Well, correct me if I'm wrong.
The base layer. Oh, go ahead.
Correct me if I'm wrong. Did we ever, besides sharing the screen, did we ever touch base on the law firm that's in on this, but also is in on GME and the 5 guys that own 10% of the company? I saw we shared the screen,
Olshan.
Yep. So they're here.
Yeah, what's the Olshan angle?
This is what they do. We could do its own podcast. If you see my screen, I have it up from someone 2 years ago talking about with GameStop. They do this for everything. They were in Bed Bath and Beyond. Remember the guy from Bed Bath and Beyond killed himself. So this is how I'm connected too. I'm based in New York. These are all New York, Long Island entities as well. Bed Bath and Beyond was Long Island. They moved to Jersey. Half of my wife's friends and families, that's how I met them, actually. When I went to work at Macy's, they all had just got laid off at Bed Bath because they moved to Jersey. Then same with 1-800-Flowers. When they got laid off at Bed Bath, everyone looked for some place to stay on Long Island. So they either went to 1-800-Flowers or they went to Macy's or they went to... So all this comes full circle. Back to your question, Olshan, this is what they do. They're a strategic... like undervalued retransition play. They pull all of the players together like they did with GameStop to get the operators. So that's the C-suite executives that you need for a turnaround when you see an undervalued company. Then they get the hedge funds needed to lock in the float and trap in the short sellers to get immediate price realization once the turnaround works. Okay. Then you also need Olshan to fill out all of the legal documents because some of what they do is illegal and they passed laws after GameStop, which is how I found this. So the total return swap is in the February document. That's only because they just passed a law requiring them to put it in SEC filings. That's why you can't find it in GameStop's filing. That law didn't exist then, and that's why it's there now. He had to go back and update it. If you go look, it says it was edited at the time the law was passed. So that's another thing where they were hoping no one would see this. Thank God they passed the law. I found it. Total return swap is in there. And this is what this law firm does. They structure these constrainings of floats legally, or even if it is illegal, the speeding ticket is well worth the squeeze.
Can I ask a question? Let's try and keep it simple. All right. GameStop, you said people still don't know what it is. It's complicated. But the general thesis people do understand is there were more shorts than shares available. And
all the time.
And if no one did anything, GameStop would have been fucked. But because everyone was buying in,
that's not
diamond
true either.
handing.
That's not true either. Most likely Keith Gill was so confident in his thesis and went all in like I am with 1-800-Flowers is because he saw the same thing with me, which is I found this through statistics first, that you statistically speaking could not have the trades that happened unless something was being done in a manipulation fashion. And then it leads you to ask more questions. And then you end up here. So even though Keith Gill couldn't find the actual contract, if he likes math, which I suspect he does, he also looks like he has a touch of the autism as well, but he's a way better speaker than I am, probably because he's like a gamer too. I'm not. He most likely knew that there is a derivative contract on this stock, which is going to do forced buyback of a shorted stock with a possible turnaround. That means there's no risk and a high probability of a squeeze. I'm going all in. I'm going to post it online. People can get with me if they want, but it's going up. So if people get in, we're going to do a 100x squeeze. If they don't get in, it's going to be a 5x squeeze.
Tell me about Raging Capital Management.
Who are they?
They have the petition of writ in the Second Circuit Court for short selling on 1-800-Flowers.
Yeah, I looked at that one actually. I believe that was written. Who's the fund that brought that against them? I think it was
Olsham Fromolowski is the law firm representing the petitioners. I'm trying to connect to Anthony's Olsham connection. Like, what's the Raging Capital and Olsham connection here with?
Yes,
the Supreme Court case.
I have this one written down. I don't want to lie and say I remember exactly. So it's in my. If you want to, I'm not going to pull it up right now, but I just want to give you an idea of like my database. So this is my Visual Studio code to run all of these models, and it helps me store all of my data as well.
Nice.
Yep. And so I have tons of I got evidence and stuff, MD documents. So I have to pull that for real deep evidence that you want. I can get it. I have it written down. See, here's like my IRS form that I filled out, my legal defense analysis. It's in here somewhere. I got to find it. But just for the sake of time, if I remember correctly, when I looked into this was Oslan. They lost this suit, by the way. I believe the court cited against them in 4 Raging Capital. And it's basically them accusing Raging Capital of suppressing the price as well and trading synthetic shares, which in my opinion, if that's true, it's another way for them to do what I'm doing, which is, you know, they've already done this goal. They have until June where a nuclear bomb option is going to happen. But all along the way, they want to throw wrenches in there to maybe trigger what's going to happen. I believe these same.
So are they trying to suppress it ahead of time for a bigger jump in that June event, or are they trying to
That's
bring
what
that
I thought
jump
too.
forward?
I thought that too. You know, I've been going back.
So are they
on
keeping
that.
the coil or bringing the jump forward?
All right. So those are great questions. I've been trying to figure. So all I know for sure, there's a battle going on, and I know all of the players, and I got a good idea of who's long and who's short, but I don't know what everyone's end goal is, and it's kind of been driving me nuts. But I'm piecing it together slowly, and things keep updating. So if you see my screen still,
yeah.
All right. You see Simplex trading in Group 1 here.
I gotta zoom in.
These two guys.
Can you
zoom
can
in?
you
A
like
bit.
zoom in on your screen a little bit to help the resolution?
Yes.
I see Jane Street, Susquehanna.
Yeah, there's the normal players, but it's these guys that are important. Okay. See this 6 million shares, 3 million shares, short. This is short. Okay. These are put options that perfectly match the shares available short of the 9 or 10 million that you saw. So these are the people who are trying to keep the price pinned to stop the gamma squeeze. They are the same people who did it during GameStop as well. One of them's based in Chicago, and both of them are market makers. They can use market maker exemptions, like I was saying. They are, I don't know exactly what their hopes were and where they're gonna, how screwed they are, because it very well likely be, if I was them, once you start seeing blood in the water and there's no way out, and you've been shaking the tree to try to capture shares, but you're getting to a point where you're missing your FINRA exemption files, which are here. Okay. These are the missing days. So this is how I know the dam is breaking. They couldn't find 3,000 shares on the 29th. Then they couldn't find another 3,000. Then they couldn't find 13,000. Then they couldn't find 3. Normally you'd start triggering the FTD cycle, but they didn't report the reports for these 3 days. So the API is pulling in 0, but really that's a red flag, dude. That's why I called E-Trade. I was like, find my goddamn shares. They're not even, and you want to know what's funny? What report is that? That's the Chicago Exchange report. Which company here is the Chicago Exchange? I believe it's Group 1 or Simplex, one of them. They're the ones who are using the market make exemptions to stop this gamma squeeze. Oh, but back to my original point, they very well could profit both ways, right? So if they shook the tree enough, they lowered the IV, which they have, very low. I know because I keep tripling down. I have 17,000 shares when you add up possibilities of my options, because I'm pretty sure they're doing the same thing. If you see the options, they're hoping that if they can't keep this going and the dam breaks, let me get my screen. So you see this 1 million? This has tripled in like the past couple weeks. It is way smaller. Way smaller. This is just February. June or March is worse.
Can I say, all right, first of all, Z Stacker here is asking if I'm going short term on this trade. If so, why? Yes. What's the long-term thesis? Are they doing AI flowers? Are they taking over the whole flower market? Or are they pivoting to something else? I don't think
the company that you're saying
here, or does it?
Well, he did say that it's fundamentally a new company. What is the new company?
It's going to be kind of a high margin conglomerate of using AI for complex supply chains. This is what I'm into as well. I've interviewed some of the coolest things that AI has changed in the last 6 months for my world is there's a bunch of supply chains that are impossible to map. It requires everyone to do these weird manual things that make no sense. And that's flowers. Okay. Flowers is a perfect one. You know, there's so many weird stuff that you have to account for on your supply chain of flowers, and one wrench in it messes up all your projections. So basically, like, your projections are bullshit. They mean nothing. AI might be able to solve this. And it's the same thing with jewelry, diamonds. Diamonds have the same problem. The supply is so. I interviewed with Signet Jewelers this past year. They explained to me the same issues they have, and they're so excited about how AI is going to fix this. That's why they interviewed me. They were hoping that I would be a guy to help. They didn't pick me because I'm fucking.
I like that. That's interesting. Basically, almost add Palantir to help them sort of
It's
improve their business.
I'm in this world.
And-
This is, if you see if you can still see my screen, this is, I'm trying to capitalize on this as well. This is also why I'm in this. So this is my LinkedIn. I'm loosely starting a consulting website that I think that I'm on the cutting edge right now of when everyone is going to realize that we all have these supply chain tools that I can build it in 2 seconds now. I don't need a developer. It takes me 3 seconds to build any supply chain tool you want. So when I tried to talk to Signet, I was like, you know, you guys have this complex supply chain. You know, I could build for you in 2 seconds how your supply chain will change if you resource from one place or the other. Here we go. If you have an LA port strike, if you have a Panama Canal issue, Suez Canal issue, the world's getting so crazy, guys.
Straight up Hormuz.
Yeah. So supply chain is changing. So exciting for me. It sucks for some people. We're going to fire a lot of people who play in Excel. We're only going to hire one guy named Trevor who makes one of these. And
yeah, I like that. That's a good reason for why they'll grow in the long term, I guess.
Well,
the ticker, by the way, we're talking about is FLWS 1-800-Flowers. I do like that AI can't take it over. You know, like AI's.
Well, AI can map out your network. It can map
you know,
out your network. Humans can't do that. It's too complicated, especially
no,
if they're
but
holding company.
The industry, right? SaaS is taking a beating. A lot of companies are, you know, a lot of tech companies are taking a beating because of AI. But flowers is not something AI or, you know, what can actually, you know, change the industry that is going to make this company go bankrupt? Really nothing. So I do like that baseline aspect. But what we're talking about is that what's the question? 1-800-Flowers, FLWS, right? What we're talking about is, other than the baseline, the growth. Look at this. I mean, the projections here is that super soon this is going to $68 to $100 according to his math, which, to be honest, I will not act like I understand what's going on. Crispy definitely understands quite more than us. But
anyone can come up with their own target price. That's what you're supposed to do as a regular investor. You're supposed to take my information, take what you agree with and what you disagree with, and put a dollar target to it. And I promise you, whatever dollar you come up with is higher than the original one. I'm coming up with a super high number. You don't have to believe me. Come up with your own. Also, or use analysts. Okay, here's a good one. Right after earnings, all analyst reports were updated. They sent them out as of February 3rd, January 29th, right after earnings. Now all analysts agree the price is around $18 today. 16
you know, I also like it because, unlike GameStop, it's very clear that, like, all right, games are all going digital. You know, I have a PS5 and I have my games digital. I never went to GameStop and bought the disc. They made no money from me from actually buying these games. So it's very obvious why GameStop is dying. Yet they had the squeeze. Flowers is obviously not dying. And
it's also,
to Z-Stacker's point here, what's the TAM? Like, I don't think that necessarily matters if there's a squeeze, just like the TAM for GameStop didn't matter as it's squeezed.
And also, people are discounting. People keep saying GameStop was going bankrupt. No, they were not. That's why private equity and Olson firm were there as well. It had no risk to bankruptcy. It was a risk-free play in their bet. Worst case scenario, if their turnaround plan doesn't work, they could sell off all the assets for more than it was trading. That's why private equity gets into these companies at the time where it's heaviest shorted. The market. Here's the other thing. Okay, back in the days, I learned that when I was in school, the guys that used to do this kind of trading, it was called a hostile takeover. You remember hearing about that, right?
Yeah.
When I was in school, how the coolest thing that we were learning about, because every time you learn, it's always like 10 years in the past. So we were learning about how 10 years in the past, we started getting computers. Guys can go on to Bloomberg terminals, actually get data, and a bunch of Harvard guys took just balance sheet stuff and like random news articles and were able to say, oh my God, this company, I could buy it for $1 million and sell all the pieces for $1 billion tomorrow. And they found tons of them. It was an explosion of private equity jumping into the public markets. Okay. A famous story is I'm from Hollywood, Florida. There's a place called Heiko. Same thing happened there. It was an awesome story. Some guys from Stanford saw Heiko. It was they built small airplane parts. It's confusing. No one understands it. These guys are like, well, no matter which way you add up the sum of their business, it's like 10x their market cap. So they bought it. That's exactly what happened. Same thing here. Fast forward to how does this work in today's age? Today's age, we can't do hostile takeovers as much anymore. Okay. It's too hard because ETFs and all the other big firms eat up too much of the float. You have to have a dilution event or a founder to have all the shares to give you enough to have the hostile takeover. You can't eat them up over the open market like you used to be able to do that. Okay. So how do you do that now? You find family-owned companies, or I believe GameStop owned a lot of their own shares, if I remember correctly. So they were able to control their own float that way. So that when you talk to some of these private equity and law firms, you say, hey, I'm controlling the supply. The only problem I have is I can't convince the market that they want it. Like I got it all here, but everyone's still saying you're going bankrupt. Well, I want to turn it around. Okay. What do I do? Private equity and Olson get together and say, all right, let me look at your balance sheet. They look at the balance sheet. They're like, dude, you're cash flow positive. If I sold off all of if I just got you out of your leases, that would show on the balance sheet that you guys actually do have profits and they're mispricing you. Let's do that. That's what they did. Keith Gale got onto this, saw what was happening, brought in retail. He didn't have to convince them because just like me, all he had to do was post pictures of his portfolio as he's getting into the phases. We're still
unlike you though, unlike you, he just gave his narrative and thesis and people did understand it. This is the big part here. How do we get retail to understand it? I know
he was smarter than me, and he knew that he couldn't give wild speculations about a total return swap and private equity and stuff like that. So he had to break it down to retail as an undervalued play. Because again, if the other things are true, those players would only be here if it's an undervalued play.
Yeah, I think as a retail investor myself, that's the best part that I like about it and understand it's the most clear.
Yeah,
the reason undervalued play based off the underlying assets, the actual growth and like where the company is, and it's not dying. It's just gonna either stay stagnant or growing, especially with AI and supply chain to the mix. That's gonna help it grow. I don't know what the TAM is to Z-Stacker's point, but the downside definitely looks mitigated. So yeah, you're right, undervalued play. But how do we know it's going to short squeeze? That's the hard part that I don't understand, how you're so sure of it. And you even have a timeline. I love the conviction, but I'm like a lot of people in the chat here who don't understand. Maybe Crispy got it a lot more than me. Anthony, do you have any questions or like, where should we steer this? I'm a little like, maybe we should definitely do more live streams and have more of an agenda because today was kind of, I don't know. This is all.
Let me also.
How do we condense this beautifully? Yeah, go ahead.
I keep telling everyone that there's a fundamental difference definition between what you think a squeeze is. Okay, so private equity would never call this a short squeeze. That implies illegality. That you're tricking the system to squeeze the price. That's not what they're doing here. They're doing immediate price reversion, price appreciation, forced price. This is in textbooks of finance. You don't have to believe me. You can look it up. It's forced price appreciation. Okay. There's ways that you can force the market to revert to the real price of the asset. And there's a whole Harvard bunch, not just Harvard, every financial university you can think of, even just shitty community colleges, study this. And this is how the world operates. So that we have two options here. If retail jumps in, it could turn into what you guys might call a short squeeze. Okay. And you can pick your favorite number because that's all dependent on how much demand jumps in. So don't try to guess because it could change every day. But if you want price aversion or price reversion based on just simple deterministic math, regular arithmetic, 1 + 2 = that is going to happen maximum by June. And then I'm saying most likely before that because they shorted too much. They doubled down before. They're kind of stuck. So they might have to have that price reversion before that. And that's why I have options. Okay. So if I wasn't so confident that it might happen before, I wouldn't have bought a bunch of options. I would just held my shares, turned off my account, never looked. But since I love seeing this battle every day, every time I see that longs might be winning, that's when I add some more options. I saw it on E-Trade and I saw how mad they got when I asked them to find my goddamn shares. And I'm literally like, babe, buy some more options right now. I'm so mad.
Let's actually, before this question, real quick, how do you explain to your wife your conviction on this? Does she understand?
No,
She doesn't. Okay.
A big turning point with her, and now she's getting worried that like I'm doing something illegal because she doesn't understand it either. She just knows her husband's Rain Man. Is when we called E-Trade, and I had to get her on the phone because some of the shares are on her account, some of them are in my account. So in order for me to call about any of the shares in her account, I had to get her and we do this all the time. I'm E-Trade knows that I'm like we're husband and wife. I'm basically like the brains. She's the controller of the account. So anytime that I need to ask all these Rain Man questions, she goes, I don't know. You have to talk to my husband. So she puts me on the phone. I first start with someone who's super nice, customer service. And I start with, hey, I'm an investor in 1-800-Flowers. I just saw on the ticker, I have an SEC whistleblower complaint about this company. So I'm already a little hesitant about things that are going on. I saw a 260,000 trade happen just now at 2:30 and flashed across the tape, one trade, and the price didn't move. That's statistically impossible unless my shares don't exist. I'm getting worried as an investor. She took me seriously. She was like, oh my God, let me get you to legal right now. I totally understand, sir. I'm getting you right now. Totally. Okay. Gets me to legal. Legal says, my wife is on there. They get her off. Then legal says, I can't talk to you unless you get your wife on the phone. And I'm like, I just had her. She already said it again. And they refuse to. So I'm trying to call my wife back around. She doesn't answer. She's down the street. I literally hop in a car. I'm like driving through the ice fast as I can with a charger on my phone, I get to the pizza place and she's 5 minutes away. I'm like, just say yes, say yes. Says yes. Legal finally talks to me again. And she has to stay on the phone for this one. This is where she hears me. So they try to push back. They're like, so what exactly are you asking? Like I'd spent 8 hours on the phone with them, which is a tactic that they would definitely want to do if they don't want me to look deeper into this. Okay. Because most likely they
like
cannot
8 hours on hold or questions. What do you mean 8 hours?
On one call, at least 3 hours on hold. And then I called multiple times that day and messages through chat. And it got all the way up to the active traded broker desk. And that's when his attitude immediately changed. And that's where I convinced my wife, which is why I'm telling you this story. As soon as we hung up with that, she goes, I don't know what is going on. All I know is I did not like that guy. I didn't like how he tried to manipulate you. I didn't like how he tried to pretend like you didn't know what you were talking about. I don't know what you were talking about, but I was clear as day that. So because he just kept getting nasty. And I finally said, hey, I sent you a legal document requesting for 3 files. You don't have to challenge me and if I know what I'm talking about or who. He kept asking me, who asked you to look into this? Who's asking you? Are you looking online? Did Reddit tell you this? Like stuff like that. I'm like, I sent you a legal request. Read it. Don't ask me no questions. He came back dead tone and goes, we'll get back to you. I go, are you sure? You're going to give me all 3 things? And I listed them out. And he goes, yeah, 1 to 3 days. Anything else? I go, nope, that's it. Thank you. And he hung up. He sounded so defeated.
Damn.
So that's good. Your wife's watching you putting these people in to apathy, defeating them. Then, she's like, yeah, don't be putting my husband on hold for 8 hours. What's wrong with you people?
Yeah, and so most likely, if it's not some big grand conspiracy that my small 2,000 shares are part of the total 50% that's most likely missing, it probably is related to what I've told you guys about, that I was on a margin account before I was supposed to be taken off. I think they accidentally left me on a margin account and been trading out my shares. So even if mine's not the pin that breaks the back, it might be the pin that causes other legal departments to look into it. So I might have psyoped their legal team to look into it because I don't got enough money to hire my own and no one's listening to me.
Yeah.
Yep.
Yeah, no, just like Matan said, it's like your conviction in this is very interesting.
I mean, it's
What percentage what for just for the people, what percentage of this is your portfolio, the 1-800-Flowers?
All of it. The only conviction I don't know is the other Black Swan event, which they did do during GameStop, is actually do most likely illegal things to stop it from continuing. So can they do that? I've mapped out all of the ones that they did with GameStop, and it would still give me nice price appreciation. So that's why I'm here. But I don't know if I don't know what's going to happen if they just like press delete and say, take me to jail. I don't freaking know. That's the only thing I can't account for.
Speaking of GameStop, just to circle back, what was up with the 5 guys that collectively had the 10%? Could you hit that real quick?
Yeah. Let me see if we have my screen.
Should I share screen?
Yeah, can you see my screen? We got to go to Fintel for that.
There we go. Yeah. I'll get to the comments here a bit. People were a little surprised that you were 100%. Tebow says, no way. Z-Stacker says, see, I would judge, but I'm 90% in hover.
Same.
Z-Stacker, ask yourself, just like how you have high conviction in hover, why is that? Fair enough.
Exactly.
He's got high conviction.
Yeah.
And to be fair to him, this sounds a little bit better than hover in terms of risk-free, because hover is a big risk. They have no revenue. We're all betting on this aircraft being what it is. But who knows? No. This was quite interesting. I'm just trying. I really like the downside is mitigated.
Yeah.
The baseline is awesome.
Yeah.
The long-term play on this is fairly straightforward. What I don't understand is the black swan to a squeeze. And if I knew and understood and had your conviction, holy, I would throw in a lot more money. Because if it's just the simple downside long-term, going from $4 to $8 maybe in a year or $12, that's nice. But I'm not going to be throwing a lot of money in at it. Obviously, you have your whole portfolio.
Well, I think it'll help to look at how my portfolio is structured, and that'll give you an idea what I think is going to happen. So if I can just get my latest screenshot up I didn't want to open my account because I didn't want to show you guys.
Is asking if TJ is playing anything else. It seems like no. He says he's
not at the moment. Yeah. Normally, okay, if you would have asked me without this saga what I like, this has changed too.
Even Z agrees. Even though he has 90% hover, this is a lot safer. His money is 100% safe, but the upside to hover is worth the risk to me. I agree.
Yeah, that's basically why I migrated everything to it.
When I keep asking about the 5 guys, I ain't talking about the sandwich shop. I just want a quick hit, man. What's up with the 5 guys?
All right. I'm sorry. Okay, we're here. Can you see my screen?
Yeah, we can see it.
All right. I need unusual whales though too to explain this better. I think unusual whales. I think they structure this a little bit better. Actually, I have it up. There we go. All right. It should be under institutions. All right. So yeah, they don't have date here. I need date. We'll go back to Fintel and look that up. But just to give you an idea of the players here, because the dates matter. But this is how you can add up the float as well. So Fund 1 owns. So first of all, there's like 63 million shares of this company. Okay. McCann owns like 3940, something like that. Okay. So then what's left is the 30 something. Of that 30, you got 10 for Fund 1. So that's 20. Then you got another 3 to another 10. That's 10. Then you got all these. That's how you get the 97. It's all of these summed up minus McCann or plus McCann minus total shares equals Fintel's 99% float or whatever. Now you asked about like who are all these guys? Why are they in this? There's a high concentration. This is not normal as well. So normally you would expect for just a regular company, even a small cap company, it would be spread, a little bit over everyone because everyone has their own thesis. No one has high conviction to buy 10% of the float of a company, right? But that's because there's something going on here, which is if you follow the dates, here we go. Let me see if I can see. I need the short interest as well.
While he does this, I want to mention, guys,
Yeah.
this is his high conviction play. This is like a once in a lifetime kind of thing for him. It's not like he's out here calling short squeezes all the time like some YouTubers. And by the way, he just started his YouTube channel. Oh, I'm not on camera. Just for this, he only had like 2-3 videos. So
I don't care if anyone watches. I just wanted to document that I saw this happening. Yeah, put it together.
Check him out though, Corrupt Dad, if you want to learn more. He just has a few videos on this. I watched them. I will say, also confusing to learn from. But if you do want to,
sorry,
if you do want to hear from him more and dive a little deeper, check out his channel.
It makes more sense the second time, though. I watched it twice, and then it resonated a lot more the second time. It's definitely a twofer.
I'm trying to find.
I just find this interesting because this stuff doesn't happen all the time, and he really seems like a roaring kitty to me. And like we are so early. If this is true, I'm just like, this is going to be super exciting and can make us a lot of money. I don't know how to convey like get this information out of you to where we really understand it.
Yeah, my basic view on it is
but how?
Real quick, I can articulate my concept real quick. So basically, if you look at the chart, it did this cup, a perfect cup. It went from $5 down to $2.65, and then right back up with the earnings that they just had. It hit $5, right? Went from like 2 something to $5, right? Then it came down, hit $3 and some change, and then so it's doing the higher low program because the company is undervalued and all that's fine. So just from that basic concept alone, it should be fine. Stair stepping up, downside minimal. And then all this other stuff just seems very interesting, and there's a lot of evidence to make it seem highly plausible. That's pretty much the simplicity of it, I think, for anybody just hopping in.
I think we need to make more videos about this and have more like agenda. Maybe one whole video just on baseline, and then one whole video on really what are all the actual numbers, the shorts, all these different things. I think we need to kind of segment it out because we are jumping back and forth all over the place. I'll let you, by the way, if you finally found what you're found, let us know and you can hop in.
I was trying to find where I can find dates for you guys, because you got to remember that like I don't trust this either. I'm pulling up this for you guys because this is what you guys trust. I don't use this. I pull SEC filings, I pull the data out of it, and I put it in a spreadsheet or I put it in my Python model. Okay, so that I know that if it says it in the SEC filing, it's true. It's also that way I don't have to pay for unusual whales. I don't have to these things. Another thing that pure conspiracy theory, but you know, I know how these are built with the API keys, the data fetching that they do. And I know how, if I was a market maker, how to manipulate my trades to even just cause an API feed error that like duplicates one of your aggregation things to make it look like something's off or whatever. So that's why I don't trust this stuff, but I know you guys do. So I would show you this to help convince you, but that's why I'm having trouble finding out the right ones based on the story that I've already put together through real SEC filings. That's what this is, right? This is someone took SEC filings and put it into charts for you. I have my own. Okay.
My favorite thing actually on this stream so far was the story of how you were on the phone and your wife was listening. And like, that's like a little signal of conviction.
That's
like,
what got me all excited. And I'm going to really bother the crap out of every complaint service that listens this week. Because
and no, the response to it, the end of the story.
She's my canary in the coal mine. She makes me not feel crazy. I'm like, because she's never on the phone with me in a situation like that. And as soon as I hung up and saw how confident that she was that something weird is going on, I was like, see, that's what I've been telling you. And now she's afraid that she's like going to go to jail for something. I'm like,
dude,
these are your assets.
Next
we
time
have-
you do these, you have to record the call.
I have it all in writing. Okay, so here's some examples of legal issues. Again, I don't want to bother E-Trade, okay? It's not their fault. I would like to use E-Trade's legal team to find my goddamn shares and make sure they exist. That's it. Because there's no other way someone else will listen to little old me. So I'm kind of forcing their hand to do that, and I think that's why they got a little mad. If they can't locate my shares, that definitely starts the cascading effect of turning off the bots.
You know what I want to get into, and we should probably wrap up here soon. We're almost getting to 2 hours.
Okay.
People are going to be watching this later and probably going to be like, "Oh man, I'm not going to sit through 2 hours." But what I actually, let me read real quick to Raymond's comment.
He's 100% right. Yes, he's
That's right.
about
Corrupt
earnings.
alluded to follow the money and
Yes.
pay attention to the conversation.
He's 100% right.
Yep.
Okay. That's why I don't want to get conspiracy theory with you guys, because no one will believe me. But if you live here, you know. Okay. And if you're around Wall Street, if you're around finance, there's a reason why retail does not have the best information. The best information is not public. Okay.
I think this is the best question to ask you right now. First of all, just to answer tight pants here real quick. Is the gist of this video explaining why 1-800-Flowers will or could hit a short squeeze similar to what happened to GameStop? Yes.
Yes,
not good.
But wasn't GameStop like 1,000x? I would say if retail doesn't jump in, best case scenario, it's 100x.
No, GameStop was 1,900%, a 19x.
Okay.
It went from 65 cents to $120.
Okay, so that's because retail
That's
jumped
20,000. That's 20,000x.
I
Just
thought it was
doing-
1,900%. I saw somewhere.
It's hard to tell, and we could argue this back and forth because of the share dilution they did after the fact. So you have to really make sure the API feed you're looking at is not doing the math wrong. Okay, that's also how they get away with this amount. No one in the world understands this stuff except for idiot Raymans like me. So you would think that the whole system is like set up to always work. It's absolutely not. It breaks every day because people don't know how these algorithms trade back and forth.
That's is my question to you, actually. Beautiful. Can you explain to the people why are you the only one who sees this and why you have the specific knowledge to where, like, this has aligned to where now it makes sense, and like it makes sense in your early, and why is that? Like, it's not like, oh, all of a sudden we all know it's simple. It's like, why are you like how Keith Roaring Kitty was, when it all started? Can you explain to people your specific knowledge and how this all led up?
Yeah. So I didn't want to be here, right? I stumbled on this looking for a job, found it, saw the company, was like, that's kind of weird. What's going on with this? Check the stock, started doing some napkin math valuations. And I was like, that's actually a good stock. Maybe I don't want to work here. Maybe I want to
breaking down a little, like, okay, what got you into why'd you even care to look at it?
Because I was looking for a job and I saw that they were hiring for AI data scientists and a bunch of top tier buzzword roles that are the roles that I look for.
Cool.
That's what
so this is what got him interested in the stock in the first place.
Yes, and then I looked at the company.
Because that's already niche. Like, there's so many stocks to look at and find some possibilities.
I thought this was the stupidest company. Again, this in Long Island where I live. Even today, if I were to accept that job and go work there, all of my friends and family would say to me, "Oh, you gave up on your career? You went to 1-800-Flowers? You wanted a safe job? Go ahead, that's fine." And that's why it was weird to me that they posted that. And so I went really deep, and I'm like, and now I want a job there. Probably won't get one, but just like forget the evaluations and stuff like that. The PhD guy that they hired for the CIO, he Alex Zelivosky, okay, he's not just a business guy. He's a quant guy. Have you seen my screen?
Yeah.
This is my kind of guy. Okay, I want to hug him. I want to kiss him. I want him to be my dad, right? I want to sit around with him and listen to my Rain Man theories. He's a professor. I would give anything. He's from Georgia State University. He's got a lot of PhD papers. I'm a stan of this goddamn dude, and that's just one of the many layers here. So that like once it just kept.
Let's come back to it. Okay,
Yep.
we know now why you're interested. Obviously, vicinity and the job application.
Yeah, that's how I got here, basically.
So now you're in 1-800-Flowers. Just you're interested in it, you know. But a lot of people are in it. Maybe, I don't know, not a lot, but let's say there's 1,000 retail investors.
It's right here. Fintel has it. It is
Also, too, anybody
0.06.
like I've talked to some people just trying to get the consensus of what people think about it and stuff like that. And everybody knows it has high short interest, but nobody can figure out what the catalyst would be. Hence,
Exactly.
you know, hence it's a seasonal organization and all that kind of stuff. So I think, you know, actually one of the things that I thought was interesting was that you kind of dug in and figured out these different potential catalysts and stuff, because everybody knows Valentine's Day is coming up, Mother's Day is coming up. You got the swaps getting swapped out in June and all that kind of stuff, and who knows? You know, these guys partnered with Uber and Uber Eats and DoorDash. You know, a handful of months back. Who knows? They could pull a rabbit out of the hat at any point. You know, because these companies can always control their stock prices. We've learned that they can release the news. They're the card dealers dealing the cards, for God's sakes.
Yes. So the only rebuttal I have to everyone saying, what's the catalyst? What's the catalyst? The catalyst was a year ago when the total return swap was signed, and then they proved they're not going bankrupt. So this catalyst is already done. The question is, how long can they legally avoid the catalyst from working? The maximum is June, but I think it's going to break before then.
Yeah, and then it's what's your definition of a squeeze? Is it going to be a slow mechanical squeeze where just like the pressure just keeps going up slowly? And then what you said made a lot of sense about there is some control factors there. They don't necessarily want this thing just to get all out of control and seem
and they're
illegitimate.
meant to do that. They're meant to do that. So those laws are in place. So let's assume retail never wants to get into this. It's just Trevor watching this, right? What's going to happen from now until June, if it doesn't break, is this. They're going to keep hitting these weird little reg show things, all these little violations. It's going to bounce, and it's been doing this. It's going to bounce up and then go right back to the next closest expiry date price as they continue manipulation. But each step along the way, that price gets slightly higher, slightly higher, slightly higher. The bottom gets higher, and then the potential one-day variance where it jumps up, and they're like, holy shit, we got to do a bunch of fake spoofing orders. And they bring it back down for a second. This is what's going to happen, where the person who signed this total return swap strategy is sitting there like, man, retail still hasn't figured this out yet. All right, whatever. Nuclear button. Boom, press. Immediate
Can you hear me?
price reversion. Yeah, can you hear me? Sorry.
Yeah.
So
we can hear you, Anthony.
So that TRS, that total return swap, is there in case retail doesn't jump in. That's their nuclear option. If retail wants to jump in, then they don't even need that. But that just is the final nail in the coffin. Give me my 3 million shares that I loaned you, and I'm a hedge fund. I know how to put them in a DRS account that you can never trade off of them.
And so there will only be able to be purchasing without selling.
They already cannot locate shares to cover the investors that own shares today. And I can prove that with the missed FINRA reporting. We didn't even get into that. So right here.
Now it's making a little more sense.
Everyone should go into this, okay? They have missed the NCTRF report for 3 days in a row. Ask your favorite AI what that means and how long they can do that for, okay? Ask it what happens if it shows up all of a sudden. Go down this thought experiment. It's very interesting. It all leads you to some key dates here, okay? So what this is, these are failure to delivers, guys, where they're not really failure to delivers because they have market maker exemption rules where they don't get to call it a failure to deliver yet, right? These are potential failure to delivers, right? They had a potential failure to deliver of 13,000 units back into.
Okay, let I'm kind of getting this now, but so there is, though, by June or earlier, there is the hedge
Yes,
fund.
I'm familiar with Gurneys, 100%. Sorry, Raymond. We said that already.
Yes.
You're spot on. You're 100% right. Gurneys is the key. Listen to Tim Dillon. He talks about this stuff.
How do we break this down? All right. Hedge fund has to get their shares back. The shares are borrowed. They have to get it back, and they don't exist. They're over leveraged right now, sort of.
Well, they're already at 100% short just off of Fintel numbers, which does not include the total return swap strategy. So what would happen just by that
Can
logic?
go down slowly over time?
How? You tell me how. I'd love to know. You have to get more shares. Where are you getting more shares from?
What was the outcome of GameStop after the squeeze when it all went down?
They diluted by selling into the retail buzz and used that capital for their future growth.
What's going to happen once this squeeze? The same thing?
It depends on if McCain wants to retire and sell all of his shares, or if he's trying to retire operationally but keep his and this is, I'm more leaning towards this one because it's been 30 years and he hasn't given up yet, and I think he's just a little bit disheartened that his children don't want to carry on the legacy, but he found a young kid who does. So I think what he wants to do, Mitchell Jacobson. He's John McCain's son he never had. This is speculation, okay?
It's
Jim
the
McCain,
guy.
not John,
It's the
Jim.
guy from the other video. He put up the 900,000 flower shop to 9 million. That's a separate company, separate family in the
Jim,
same region.
This is speculation now, but most likely Jim wants to retire but keep his empire. Does that make sense?
Yes, that makes sense.
Okay, how do you do that? You work with another billionaire family that is going to help you keep your shares and leverage the fact that you hold the entire supply of your company while they help you increase the market value of your company. And everyone at one point is going to say, oh my goodness, can I have some of those shares? But by that time, all of the shares will be owned by Mitchell Jacobson and Fund One and the people who are not selling. And you can see it as well. You can just do any favorite math. The only shares that, okay, here's another thing. Okay.
We need to break this down on a whiteboard, I think.
Yeah, well, at the end of the day, I think we got to get started. Yeah, we can kind of go. So you see the 6 million shares bought. You see my screen right now? Yep. How could you buy 6 million shares if we've already shown that once you take the 60 million minus everything everyone else is holding, where does someone get 6 million shares from?
What that makes sense. I don't know.
It's the same shares trading back and forth.
Okay.
And once you add up all the investors, right? You get maybe, I don't know, less than a million shares. It's on Fintel, right? Fintel has the amount of retail. Retail is in for this. That's probably Trevor's shares. See that? That's Corrupt Dad. That's the only person in this stock. Okay. No one else. Just Corrupt Dad and you guys. And the other funds.
No, I'm not in yet. I didn't have time. I'm buying.
All right. Well, you know what I'm saying. You know what I'm saying.
I bought a little bit on a dip.
Which is all right. The only way this is possible is if these guys are trading it back and forth to suppress the price because they're using market maker exemptions to avoid the squeeze, which is exactly what they're supposed to do. It's what I would do. It's what the law was set up to do. The problem is the law is also set up to not do that forever. There has to be an event where liquidity is introduced into the market, aka
is there no extensions available for them? And
yes, they're maxing out. Yes, they're maxing out on.
So June is maxed out.
Well, no, there's multiple catalysts. So like on Tuesday, they hit the exemption of the reporting that they didn't report in started on the 4th. So that forces them to at least locate those, 13 to 3,000, maybe it's like 20,000 shares that they have to find then. The problem with that is they've also accumulated FTDs in the millions since then, but we don't get that information until every 2 weeks. So we're going to get the next accumulated FTDs coming up around Valentine's Day, which will tell us that, plus what they've just missed the reporting and accumulated, that there's probably stuck in a really big hole. And that's when smart quants like me, who had all these theories, it's shown in the actual FINRA reporting at that point, and that's when the pin breaks. They can't hold it anymore. I don't know. Maybe they do some weird stuff, and when this new report comes around Valentine's Day, it shows that they were able to locate shares. But then again, like I said, that would change my whole thesis. I got to go back and figure out how that's possible. It's not possible. There's no other shares that exist. In other companies, there is. And you can create complex derivatives to hide it, like doing put options and stuff like that. I've accounted for all of that. They just keep getting worse, and it's getting so worse that they're legally missing their FINRA reporting because they can't find shares.
This is crazy. This is going to be crazier than GameStop, honestly. It
Well,
sounds
again, I mean, it happens all the time. And if retail doesn't pay attention, or even big investors, I've been posting on LinkedIn, if maybe one of these big firms saw, and is just, if they just look at the data, they'll see the same thing. And all they got to do is do one big buy in a key time, and it's a cascading gamma effect, right?
I think if we went live every day for like 1 hour and talked about this,
well,
we'll all learn and understand more, everyone here. 2, I think retail and people will start picking it up, and we got to start this. I want to learn if this is true, man. Like, fuck everything else, bro. Like, fuck your job, fuck all your stocks. Like, I want to sell my shit and buy this. I want to have your conviction 100% in this.
Well, there's no risk. So the only argument I would say against that
and the fact that there's no risk is like, what? Then what are we doing?
Little
here?
to know. I can't give you financial advice without saying little to no risk. But the other point, the only thing I could argue is, like I said, could there be some black swan event where they delay this all the way to the max of June? And could you have had other investments that were more profitable in that time? Of course. I don't know.
But it doesn't matter because once this
investment takes off, for me, I'm an investor who went to school for finance. It's not about max gain and lottery tickets for me. Sometimes I like doing that. I like taking a couple $100 of my portfolio, putting it on a lottery ticket. But this is different. This is a low risk with some reward, and potentially insane reward I've never seen in my life. So why wouldn't I?
My only thing is, how do I go all in? It's hard to go all in. I don't know. How
so that's why.
I mean, the only way to go all in is to have your level of conviction and understanding, which we obviously don't have yet.
All right, so that's another thing. I've asked myself this, right? I only have like $10,000 in straight cash that I'm willing to deploy right now on anything, even if I was fully confident. But I wish I had more. I wish I convinced someone to invest in me and gave me $1 million today. I'd make it work. I'd be the pin that triggers this. You gave me $1 million, I could trigger this. Okay.
That's crazy.
I promise you I could.
If you believe that, I mean, like, fuck.
That's why I'm posting on LinkedIn, because if I can get one small firm to agree with me, if they're a quant firm, that's when they'll see it. If they're
what kind of firm?
I need a quant firm.
What have you tried to reach out to firms or?
Yes, I have. Yeah.
How can I help you? I'm here in Miami. I mean, there's many capital venture firms, and
the only problem is,
I mean,
if I'm right, it's gonna Citadel's on the other side of this. Yeah. When you see Ken Griffin, make sure that I'm coming after him.
Can we tell him to get on the other side of it?
Well, it's another thing. If you watch, if you love stories and you want to figure out what's happening, it changes every day. To your point, we could do updates every day to explain this because it changes every day. If I can go to the options thing real quick, I just had that up. Where was it?
This is an interesting question. What do you think to
look at those puts? Why would someone do puts there for $1?
Well, are those missing shares missing from a specific brokerage platform or all platforms? He's asking. Robinhood worked with Citadel. I wonder if this is market manipulation.
Yeah. So there's a difference between legal market manipulation and illegal market manipulation, right? I'm going to do my best to prove illegal one, but even if I don't, I can prove that they're doing it
Oh, we have a
legally.
PowerPoint this whole
Yeah.
time. We have a PowerPoint you haven't shared.
Yeah, you didn't see this? You want to go
Oh
through it?
no,
real quick?
not at all. This
Sorry.
is the thesis. There we
Again,
go.
but
This is what
it's
people want.
like I can't express though that like it's so all over the place, because for me as an idiot Rain Man, I like to do that when I'm brainstorming stuff, so that if all of my data, my simulations end at a similar range of possibilities, then I don't care. I know it's probably going to happen. Does that make
Okay,
sense?
Let's at least see the
we're
first
2
page.
hours in. We're 2 hours in. Let's
see the first page.
sum this up. Let's sum this up with this PowerPoint.
All right.
Hidden value, short squeeze, 1-800-Flowers. Here we go. What's
All right.
let's
So,
see this.
yep. I also try to ask AI to help me organize my thoughts correctly, and this was its recommendation to put my notes into a story, which is why flows now, which is because this is the market cap, the cash alone plus their book value of some of their assets, that's their plant, property, and equipment, is worth $500,000 today. Okay, so they're already negative.
My goodness, you had
Yeah.
this number the whole time, bro. We asked you,
But
so
everyone
many-
could look this up. Why do you believe this? I could have made this up. You want me to change this number?
I just needed to hear the number.
Here,
Half
look,
a billion.
now
I
it's
just wanted
this.
your
Does everyone
opinion.
believe me?
Half a billion in hard
All right.
assets.
Okay, but
Finally.
I
And
want
the market
everyone.
cap is trading at 200 something.
I want everyone else to do their own math, because I promise you, it comes up to a complete imbalance. So,
But that's like
And-
saying I can't read the book, but I got to go do the research myself. Why the hell? Why the
No,
hell do I got my
I'm telling you-
library card?
People
I'm
want
telling
the
you- I'm
TLDR,
telling you-
okay?
wait, I'm
They don't
telling
want
you-
to do the research. They
I
want to
agree
hear
with you.
from
You guys are not wrong. You guys are not wrong. Okay. I'm just saying that I'm hoping that, hey guys, don't read the book. Look at the back, and you're gonna be like, holy shit, this changes my idea of the whole entire world. Does that make sense? So okay, we
Yeah.
can go through this real quick.
Let's
'Cause
go.
you're right.
Let's go
go.
through
Let's
this.
do
I
this.
wanna
Okay.
wrap
So
up
some
in
more
like
key
5 minutes.
metrics. Yep. This is the price it was at last time I did this. This is the market cap. I'm saying this is not even all the assets. This is just Harry and David. Okay. That I didn't account for.
I don't know if people can see this well. Can you zoom in a little bit?
Yeah,
on
I
the-
got
just
you.
so.
Yeah, I can put it full screen.
Okay,
if you want
perfect.
to.
That's good. No, that's good.
Hey, let me pull it back in. Okay.
Okay.
So this is where you get the short interest of 9.6 million, where clearly that's what's agreed as the tradable float. But I would argue the tradable float is even higher because of this wolf pack locking up 40.5% as well. So fair value alone is $12. This is just me doing a bunch of napkin math. I would move this up to around 16 now, just based on all of the analyst reports that came after earnings are pricing it as 16. So again, it doesn't matter what some idiot named Trevor came up with on a napkin. It matters what the market does. And the market's best researchers are telling you this is worth $16 a price after the latest earnings. Okay. So that's why there's so many different layers to here. No matter which price you pick, it's still undervalued. Okay. Even the bear case, revenues decline, accelerate faster than cost cuts. Macro recession kills discretionary gift spending. The Wolfpack quietly exits. This is still worth $7 and still goes to $7 the minute they turn off the algorithms. Or if they wanted to keep pushing this down to bankruptcy, and John McCain says, fine, you pushed my stock price down to pennies, I'm going to do bankruptcy because now I'll finally get paid out $7 a share in bankruptcy, and so will the people who own the shares. So that's why he hasn't capitulated yet. He'll still get paid more than what the stock's trading today if he files bankruptcy. He'll make maybe $10 a share. He believes his company's worth in the 60s to $100 a share, and that's what he's fighting. Okay, so that's why there's no risk. If he fails and it goes to bankruptcy, you will still get more if you get in now at a $4 price.
That's
Okay.
crazy. Well, I actually don't know how that works, but if it does fail and goes into bankruptcy, it gets
Go down that rabbit hole.
delisted. It gets delisted, but then what? You get your money much later after they sell all the shit. How does that all work?
When they sell assets, most of the time, retail shareholders don't get any money because the way of it's structured. So they have a lot of corporate bonds. Bondholders get paid out first. And most other companies, once you subtract out all the corporate bonds from the Chapter 13 bankruptcy, there's nothing else left. So there's $0 left. Retail can have, half of zero, which is zero. So that's why you lose. In some companies, the ones that private equity looks after to do a turnaround, in order to mitigate their risk, they make sure it's a company that even if it goes to Chapter 13 bankruptcy, they'll still get paid out because they have more cash and assets than they do in the debt that they owe. And what they will get paid back will be more than what it's trading on the market today. So it's a risk-free asset from private equity's perspective.
That makes sense.
Okay. If it goes bankrupt, they make double. If it's a turnaround, they make 10 to 1,000x if retail notices the turnaround and also jumps in. If retail doesn't notice, it's 10x. Is it making a little bit more sense?
Yep.
Okay. Back to valuations, and maybe we can get.
By the way, is this what you show and talk to when you go to a firm?
No, I'm just posting on LinkedIn like random.
Okay. No, but you said you went to firms before to tell them to start investing in this. What?
No, I've been messaging them on LinkedIn, or every time someone adds me, I'll like message them on this. I'm trying. You got to do this stuff delicately, right? These guys are professionals, right? The old me would never put this on my LinkedIn. I'm a professional person. I wouldn't even put my face on here. I wouldn't let you guys call me Trevor or whatever. You caught me in a midlife crisis, I think. I don't care anymore. I'm so confident on this that I'm willing to call any hedge fund that's willing to listen to me and tell them how, if you're not investing in this, you're a freaking idiot. And I'll tell you why. Problem is, I'm just some guy still, so they're not going to listen to me. But I am getting some weird data points that some high-level people are responding to me, sending me weird side messages, telling me, hey, you have some interesting theories here. I'm going to touch base with you in a month. I got Jim McCann liking my stuff. It's pretty interesting. So again,
we should get him on the pod.
Those are just, I'm worried about what I haven't mapped the full play here. And I don't know how much is legal versus ethical or what, you know what I mean? So I almost I'm afraid to shine a light on them.
Doesn't hurt to ask.
Yeah, at the end of the day, I kind of don't care. You know what I mean? If you're doing something illegal, you should not do that. So, we can ask.
Sometimes the answer is in the silence too. You know, a lot of CEOs they don't want to have conversations. So if he wants to have a conversation, that's a good indicator.
Well, I emailed Jonathan Lennon when this first started back in November. Jonathan Lennon is the manager of Fund 1. And I didn't know that he was the one who had the total return swap. I didn't know that he's the one who's at least a big player in this possible squeeze. And what I emailed him was like, hey, I like your 1-800-Flowers investment. You should reach back out to me. I got a whole thesis. And he did not respond. Everyone else always does. And that's why I'm like, oh, shiz. I shouldn't have sent him that message. So that silence was pretty key too. When everyone else is at least sending me back something of like, even if they don't want to really engage with me, they're like, hey, nice to have you as a connection. Pretty interesting insight you have. That's it. But some of them are really coming back with me. Hey, send me the PowerPoint you got. Hey, did you really see that total return swap strategy? Send me the link.
We actually have someone joining here soon, which I really wanted to wrap things up. But Sammy's going to be joining us in a few minutes. He wants to pop open some charts and stuff. And he's a big TA guy. Although I really wanted to wrap things up. I don't know how much longer we're going to go.
Yeah, I have 5 kids. I got to go play with them soon. Guys.
No. Okay. Do you think? No. Another time.
Oh, okay. You know what? Yeah, we'll do another stream.
Okay.
Yeah, we'll do another time. But yeah, this has been very interesting. I definitely want to get more into it. I
have this online too.
I have some Salesforce options that I'm planning to sell tomorrow because Salesforce is going to do a big Super Bowl ad with Mr. Beast today. So I really hope Salesforce is going to do well tomorrow. So I'll be selling those options and putting that, hopefully, profits into 1-800-Flowers. And then I'm also going to be selling some of my bonds to buy some because I'm pretty cash low right now. Yeah. Looks very interesting. But I'm not going to be selling any of my other stocks to get into this yet. But that's what I really want to get into this week. And we'll talk a lot more this week, I think, and do more live streams. Because if everything you say is true, this is very interesting. And everything we do day to day, fuck your job, fuck what you do. Like I got to put everything aside for a minute and take a second to digest this.
Hey,
This is going to make more money than, most of us can make in a year from doing what we usually do.
And I got one more proof that you can do this literally every day or week. If you want free money with 99.9% risk-free asset, you just lose.
Oh my God, you sound like a snake oil salesman.
Just wait and listen to me. Prove me wrong on this. Okay, hold on.
Guys, risk-free 99.9% guarantee.
It is, and it's just simple logic. Okay,
infinite money
because the market maker has to do these exemptions I'm talking about to limit the squeeze, right? If they keep succeeding and you want free money without any risk, but you will miss the benefit of the squeeze, buy 100 shares and sell a call option and keep buying it back and reselling that same one every time the price jumps, it goes back down. Okay. You will get free compounding money. The price cannot fall below that, and neither can the IV because
break that down real quick. You said that real quick. You buy 100 shares, you sell a call option.
Covered call,
right? On those 100 shares.
Yep. And the more you do this, the higher you can get a bigger leverage, right? So if you do,
but you'll be missing the squeeze. You're just you're only
but the IV
if it stays coiled, like you said.
But the IV is also high. It also never really goes down, except it does actually go down. It goes 5 or 10 cents, which is a lot. So if you get lucky, you watch it every day intraday, you might be able to buy it back. So you basically sell it for 30 cents, you buy it back for 5. You sell it for 30 cents, you buy it back for 5. The reason why the IVs are doing this is because the market makers using their market maker exemptions to limit the squeeze from happening while simultaneously doing call options just in case it does happen. They will benefit from it as well and be able to pay back some of that debt that they're going to owe from the squeeze. So that's why, and the call option increase matches the exact dates of all of these other dates of these buy-ins. There you go. Look at that.
Call me Captain Obvious, but the person wouldn't miss the squeeze if they just bought shares and held them in a different account or
yes,
had them
but if you want truly free money, you sell covered call. So the only way a covered call wouldn't work in another situation is if the price goes down. So then you would lose some money of that, plus you get some risk exposure from your covered calls. Hopefully it's less. This price cannot go down any lower. From simple supply plus demand equals price. It cannot go any lower. It's physically impossible. So you are essentially a 99.9% guaranteed free. It's basically an interest rate loan for you holding your shares, waiting until they turn off the algorithms. So you're not going to benefit from them turning off the algorithm.
That makes sense. That's interesting. But that's a small play. The big play that we're all excited about.
What I'm doing is I'm using
right here
lots of that to take that capital, buy more shares once I can. So basically I'll sell a covered call. I'll get like $1,000 or a couple $100. I'll buy it back for half that. Now I just sucked out $100 from the system just from volatility, and I buy a few more shares with that, and I keep the process, and I'm tightening this a little bit more each time.
Just remind us all to sell when we're up here, because will this happen, right? This will happen right after. This
the
big
drop? No, that depends if retail jumps in. So the mechanical price appreciation, you could call it a squeeze, that private equity was always hoping for, that they're trying to stop right now because retail is not looking at this. This is just between private equity and the market makers who signed the TRS contract. That is going to be a battle until it finally gets up to the real price that it's supposed to be. If retail jumps in before that, they can't stop the wave. They have to capitulate earlier. And yes, you will see it go to, let's say it was going to go to 60. Now it goes to 120 before it goes back to 60.
Corrupt is the real deal. Your story is indeed viable.
Yes.
Raymond likes it. People are interested. Hey, we've been over 2 hours and people are still listening. There has been a lot to digest here. And this was very fun because this is all extremely new to all of us, really. And you can't find this anywhere else. So if you like this, I will definitely be streaming with Corrupt Dad more often. We'll be talking about 1-800-Flowers because the story here is just beginning and is extremely interesting. So hit the like, hit subscribe, check out his channel if you want to learn more. We'll definitely be doing more of these, but we should probably wrap up here. You got 5 kids. You got to attend to.
I just want to
I
say
got something to do in the Super Bowl to watch. I got a big bet on the game. And
I gotta go watch it too.
I
I just want to say I appreciate everything. Thank you, because it's the world that helps my idiot Rain Manness organized into a cohesive thought, right? And this is the problem with social media. Like, I've always been this guy, but like when I get my ideas out there, I can't get a consensus to rein it in. So there's always a guy like me, a canary in the coal mine, and then we need the rest of the world to even care to figure out if this guy is truly crazy or he is the canary in the coal mine. So either way, we're going to do something awesome here to figure out what's happening, and we're going to learn a lot from this. And that's why I can't let it go. So just thank you. Thanks for spending all your freaking time. That's all I want to say, because no one else is willing to go this deep.
Yeah, man. That was the reason I had the idea for us to do this, is because if you look online, there's nothing about it. You know, like there's some things from like 8 months ago, a year ago. You know, the usual suspects that, you know, cover every company. Like there's like little AI, you know, 30-minute videos that people just made, but there wasn't anything about it. And I watched both your videos and talked to you and stuff, and it made sense. Like the not much downside potentiality, the it's going to happen regardless if retail gets in or not factor.
And let me just leave you with this. So I have to feed everyone breadcrumbs to get down to my crazy brain to get you to agree to some of the outlandish stuff that I believe in. Okay. So I'm just going to say that if you want to have fun and you love conspiracy thinking and stuff like that, do some thought experiments about what's happening with the overall market right now and Corrupt's dad's opinion on leveraged assets, credit on top of assets, what's happening globally. Why is Bitcoin selling? Why is gold trading like a meme stock right now? Go back in time and when this has happened before, and why did it happen? We're in the middle of a liquidity crisis. Just like with 1-800-Flowers, they can't locate shares all over the place because of the immense devaluing of assets in one place, and the immense volume that got pushed into the market shows all of the holes in this market that's been there ever since. Okay. This happens all the time. This happened with Archego. This happens when the repo market did that one weird thing a few years ago. These are just bricks in the wall showing that it's breaking. The reason why it happened with GameStop as well is the market's all connected. So when you have first of all, when you have one weird squeeze like a GameStop and this one going on right now, there's most likely other ones. Aslan is doing this with other companies. I've talked about this before. You know, there's a similar thing going on with Funko right now. Michael Burry and Ryan Cohen are talking about some Warren Buffett type of conglomerate thing they're going to do. But wait, this is why this is happening. Market makers are literally battling multiple price appreciations at once, and they have to sell off all of their great assets temporarily to cover this. Hopefully no one notices in the short amount of time so that they don't go bankrupt instantly. And that's why you're seeing a mix temporarily of good assets for what used to be toxic assets. And when it goes back to how it's supposed to be, you're going to be surprised that a lot of these things that used to be toxic stayed the same value. And Bitcoin finally goes back up because they got to suck out that liquidity to fix this problem that they're seeing as well as Corrupt Dad seeing. This happens every time. So like squeeze season happens when multiple people like this orchestrate similar plans at once to squeeze multiple places at once. And it really screws the whole market because of the derivatives market. They're all built off of each other. Go just watch the Bill Huang. He's going to jail now for like 30 years and his Archego strategy, because he's one of the great examples of when the total return swaps failed and he had to go to jail for it. And so that would go against my theory here, right? If it failed in some way, but this is different. But it explains to you how.
Send me maybe these links you're talking about, some of them, and the YouTube
Yeah, I was
link
trying
also
to.
to
It
that
wouldn't let
guy
me join this stupid chat. Why does it not let me?
No,
join?
no, later. You can send it later. I
Okay,
want to
all
add
right.
them to the description to anyone listening later.
Yes. Yeah.
They'll be in the description of this
Oh,
live
here-
stream.
Maybe I have to.
But yeah, the chart itself is very interesting, like Sammy says, but the story here goes much deeper. So this is very interesting. We'll be following up. And yeah, thanks, Raymond. It has been a great podcast. It's been very interesting to me, and I'm very excited to see where it goes. I just hope I can accumulate some shares before it all goes up. I'm gonna have to be doing some selling here and there to get my share count up on flowers here. But yeah. Oh, there's one of the Jacobson chat. You guys can check that out. I'll link it in the description in a moment. Yeah, any last words? We'll wrap up here.
That was interesting. Very interesting. Because I watched the other videos. It made sense listening to what you say. Because, you know, you started working on this 4 months ago. When so all the information you have is a collection of 4 months worth of work. I've known about it for a week. Matan's known about it for 3 days. So it's kind of like getting up to speed on some of your theories and stuff like that. I feel like I'm pretty close to good on that. And it's just kind of, just wait and see what happens. The mechanicalness of all these things. That's what mechanical things do. The cog wheels move forward and the machine works. So,
As another fun,
51% plus chance of success.
Yep. As another fun example, go back to listen to Jeffrey Epstein's admissions of his participation in the 2008 financial crisis and how he most likely was the cause of Bear Stearns going bankrupt by doing the same thing here. He asked to recall all of his shares at a key point when these toxic assets were most toxic. And he also set up those toxic assets at Bear Stearns as a thing. Okay. So this, to sum it all up,
crazy theory I've never heard.
No, it's not a theory. It's proven. It's 100% proven. No, not all of it. He caused Bear Stearns to collapse. But that triggers everything else. Yes.
Oh, well, what came first? Bear Stearns, no?
Bear Stearns, yes.
Brothers,
And where did Epstein used to work? Bear Stearns. What department did he used to work in? Oh, the collateralized debt obligation one. Who had the most collateralized debt obligations on hand at any time besides Bear Stearns? Oh, it was a Cayman Islands entity owned by Jeffrey Epstein with a 50% ownership by Bear Stearns.
I think you've done a good job in the last 4 months putting this all together in a very investigative reporter mentality. Hats off to you for the 8-hour phone calls with these people. You obviously really give a fuck and you really believe it. You really believe it, and it's very obvious. And it's certain things are etched in stone concrete, certain things are speculative, but the story makes sense. That's the prediction of what's going to happen is the story makes sense. So it seems very plausible.
Basically one month and I felt like, man, this is a great valued asset. 2 months and I was like, what the heck is a conspiracy theory going on? 3 months in and I'm like, holy cow, this is like ties into everything that's going on in the world today. What is going on? So if I'm wrong on all those other ones, that's fine. I'm still here for the first one.
Yeah, you've done a good job piecing it all together for real. Some of this, like me and Matan talk about Hover a lot. They've been around for like a year. You know what I mean? There's not that much cookie crumbles to look for under the rug, but you've done some. These guys have been around since what, 1993 or 1973 or something like that.
Yeah. Well, if this does turn out as we think it might, that'll give us a lot of social equity and even real equity to do this in the future with other stuff. I want to get deeper in some of these other companies. I'm trying to, in my opinion, what I think has changed that when I saw GameStop happen and I was real sad to see Keith not turn into like a man of the people. That's kind of what I was hoping, is that I really think that we might be able one day to kind of decentralize research. This is kind of what's happening in the conspiracy theory world today, right? Everyone's online and piecing their own theories together and helping get to the truth. That needs to be done with finance, right? We need to be pulling these SEC documents together, and then these complicated entities based in the Cayman Islands, and then another one based in Rincon, Puerto Rico. Trevor should be posting about this. Other people should be saying stuff that he got wrong or adding connections that he missed. And we build a decentralized network and we follow the money every time. That's our leg up. Private investigation, follow the money, and stop valuing assets because we know it's manipulated. Let's just copy what they're doing. And it's not following Nancy Pelosi's stock pits. That's too late.
Well, that's fine. In the vein of wrapping this whole thing up, I just want to say I think you've done a great job, and all we can do at this point, in the end, I'm happy you can spend more time with your wife and kids now, because you've pretty much, the final chapter. It's off to the printing press now, because like you said, it's going to happen regardless if retail hops in or not. All we can do is just point in the direction. People hop on or they don't, but it's going to happen regardless if it all, seems accurate. But I just want to say, I think you've done a great job. It's very interesting what you've done and all the hard work you put into it. And my hat's off to you.
Yeah, you guys heard it here first. No one's talking about this. We are glad to be I'm glad to be the vector of this for you, really. So thank you for doing all the work and the research, the 4 months that have gone into making this. And now it's time to finally shed a light on it. So we'll definitely be continuing doing this. And yeah, guys, everyone, thank you all for listening and tuning in, sticking around 2.5 hours in. All right.
Yeah, so much more. Yep. We'll touch
So
base.
see you guys next time. As always, till next time, stay thinking, question everything, and peace out.